So hello to everyone. I hope my voice is audible. It is loud and clear to everyone. Please make sure that you all are muted and we are going to start in a couple of minutes time. All right. I'm just waiting for maximum number of students to join us, maximum participants to join us before we proceed with the meeting. So, meanwhile, you all can confirm me in the chat box if my voice is audible to everyone, if the screen is clear, crystal and clear, if you can see me, if you can see the spreadsheet file in front of you. All right. Also, I have mentioned my WhatsApp number. If there are the students who don't have June 2025 past paper file, they can WhatsApp me and I will be providing them with the June 2025 file. Okay. So as I said, just let's wait for maybe 2 or 3 more minutes before we proceed, before we start, before we go ahead with our session. And as there are participants who are joining, we must wait for a while. All right. I welcome you all to this session, and as always, the game changer session has really been a game changer session for many students in the past. As always, this time, once again, there was a hat trick of AFM exam positions by my students in the most recently declared results. So, welcome to everyone, and it is an opportunity for each and every student to learn AFM. All right, before we proceed, I have one short announcement to make as well. And the short announcement is that these 2 days, Saturday and Sunday Game Changer series, is open for all. It is a free of cost, open for all session. However, we have some more things planned as well. So if after the session you feel maybe you can subscribe for the complete package, and I have placed a file in front of you. Now, what is it? If you wish to enroll for our revision camp after today's session, you can enroll for it, and the revision camp is at a huge discount for each and every student. So what does it include? It will include recorded content on the portal, some past papers, some compiled handouts, list of top 50 questions. Now this is very important. These are the 50 questions that I have picked from previous 15 years, and a lot of students have passed their exam using these 50 questions only. They solve it a couple of times, and once they do, they find it very useful because these 50 questions cover all the concepts that can possibly be tested. So it reduces the chances of failure significantly. Then there is a 67 pages theory booklet and a super secret sauce. Now, secret sauce is a 3-page document highlighting what you must do in last 7 days. This secret sauce is going to be provided to you by the end of coming week. We are right now over here, that is Game Changer Webinar Series day number 1, that is live on 9th of August. Tomorrow we will have Game Changer day number 2, same time. Then for June 25 and June 25 day 1 and day 2, these recorded sessions will be provided to those who enroll. Then we will have some live practice session, a pre-mock, which will be conducted live. This pre-mock is a 50 marks question, and everyone has to come and attend it live, open their Zoom camera and do it as if they were doing it in the exams. After that, we will be having a pre-mock debrief session. So I will be discussing the question that I gave you on 13th, on 15th of August. Then we will have an extensive grand revision session that is scheduled on 17th of August. We will have a final mock exam. Again, it will be live. It will be very beneficial and it is going to be conducted on 22nd of August and I mark these mock exams myself. Then we will have a detailed mock debrief on 24th in which we will be discussing the mock exam. You will all get the results on 30th August. We will have a complimentary mock and a complimentary debrief. And then there will be self revision and summary notes reading. And finally, you will be ready for the exam date that is on 5th of September. All right. So this is the plan. And this entire plan is available. If you are an enrolled student, you have access to everything. You will have access to everything. If you have enrolled for the regular batch, for the reset batch, you will have access to everything. If you are someone who is willing to enroll for revision batch, you will be provided access to these things as well. So I hope my voice is loud, audible and clear. Now, one important thing that I want you all to do is to WhatsApp me your complete name on my number. And I have mentioned my WhatsApp number over here. This is my UAE number that I use for AFM students. WhatsApp me your complete name. This is one thing. Marks for AFM if you have appeared previously. Maybe there might be students who are giving AFM for the second time. And then list me or send me or mention 3 most difficult topics that you want me to do live in detail in coming sessions. Okay. So this is actually going to help me decide how I plan my day number 2, how I plan today's day, and how I conduct my future live sessions. Also, have you all downloaded June 2025 past paper? Have you all downloaded the June 2025 past paper? Do you have link to June 2025 past paper? Yes or no? If you don't have the link, please WhatsApp me. Let me share you link to download the June 2025 past paper so that we can start and solve this specific paper. All right. Okay, right now I will just be sending you the link. I cannot read all the messages, so I will read messages afterwards and I have to send some more study resources to you. Right now, I will just send you the link. So whoever is messaging, I am going to send him the link. What you have to do is that I am going to give you a Google Drive link. Number 1, go to Google Drive. Number 2, go to past papers and relevant material folder. Number 3, download 2 things. All files in June 2025 past paper tab and all files in June 2025 ACCA official mock tab. Okay. So I want you to download these things. Whoever is messaging me, I am now responding them. I am now replying them. And I want you to download these things. All right. So please download all the past papers and we are going to start solving these past papers. Also, do let me know your complete name, your marks in previous AFM attempts, if you have given AFM previously, and also mention 3 most difficult topics that you want me to revise or recap. Okay, I am sending the links to those students who are messaging me. I have also sent the links in the relevant AFM public WhatsApp group. So if you are part of those public WhatsApp groups, you can also probably find the links over there. Otherwise, you can WhatsApp me. It will take me probably 2 to 5 minutes. It is a 2 to 5 minutes exercise. I can send the links to everyone. Just go to the Google Drive, go to the past papers and relevant materials tab, go to June 2025 past papers folder and download whatever files are over there. Okay. Someone can also do one more thing. If they get the file, they can spread it, they can circulate it in the relevant WhatsApp groups. Okay, we can save some time. However, I am sending these files so that everyone has the question paper in front of them before we start to solve it. It is very important that you have the question paper in front of you. We will be having a very detailed discussion of each and everything that is included in those past papers, including the theory area, All right. So please, everyone, go to the main Google Drive link, go to the past papers and relevant materials tab, and you can download it easily. All right. So hope I have sent it to everyone. Whoever messaged me, I believe I have sent it to the relevant students. One more thing, what I can do. All right. I believe I have sent it to everyone. Correct? Go to the Google Drive, go to the past papers and relevant materials tab, go to June 2025 and download it quickly before we start. Also, while we take the class, make sure that you are connected on two laptops. Number one for taking the class, and second one must be, or a second device or a mobile phone must be to have the past paper in front of you. Have you all received it? I hope you all have messaged me and I have sent you the links. So I am hopeful that we can start. Have you all downloaded it? Yes or no? Is it downloaded by now? I hope you all have downloaded it, correct? Kindly do so quickly. I have to wait for a couple of minutes probably for everyone to download it. All right. Shall we start now? Yes, we do have a WhatsApp group. What you can do is that if you are a public student, there are a lot of free resource public groups. Do you all know about the free resource public groups of WhatsApp Wi-Fi? If you are not enrolled, even if you are not enrolled, we do have a free resources group. So please do make sure that you are part of those free resource WhatsApp groups. Wi-Fi has paid groups as well as free resource groups as well. So please make sure that you are part of the free resource WhatsApp groups as well, because tonight I am going to give you a lot of free content as well. All right. Tonight I am going to circulate a lot of free content on Wi-Fi WhatsApp groups as well. For enrolled student, there is a discussion group and an announcement group. For those who are public students, there are groups for public announcements. There are groups for public free resource materials. So do make sure that you are part of those groups. All right. What I have done is that I have also shared the relevant file, the relevant question file in the public WhatsApp groups. Can we start now? Have you all received the files? All right. Now, can you all confirm me if you have received June 2025 past paper? Can you all please confirm me if you have received June 2025 past paper so that we can start and we can start solving it as early as possible? All right. If anyone has still not received it, please let me know ASAP so that we can start. All right. So now you have to be with me, and we are going to solve this past paper. Okay. AFM is all about a lot of practice. AFM is always about a lot of past paper practice. So in these 2 days, I will try my best that we do a lot of practice and also conceptually understand the things on time. Are you all ready? Shall I proceed? Shall we start with the session? All right. Now be with me. Try to understand how you will be reading a past paper question, how you will be presenting it, be it theory, be it computational area. If you are attentive, you will realize that ACCA AFM is one of the easiest exam optional papers. Let's begin with the most recent June 2025 past paper. So this was your question number 1. Now let me clarify. ACCA provides random 3 past paper questions from March and June 25. There are numerous sessions. There are more than 3 past paper questions that were actually tested from the students. They just pick up 3 random questions and give it to us as a sample. So this is one of the questions that was given by ACCA. It says, Campai Company is a large listed company involved in the production of machinery for the logistics industry. Recently, it has been growing successfully by undertaking strategic acquisitions of competitor companies. It has made initial inquiries about acquiring Skal Company, a large unlisted company. This will be an important strategic acquisition for Campai Company. Now, you have to be very careful. 50 marks of your AFM are theoretical and 50 marks of your AFM are computational. So whenever in the exam you read a particular paragraph, you just do mind mapping, try to understand what are the key words. The first keyword or the first thing that you will think is that who is the acquirer and who is the target company. So over here, Campai is the acquirer and Skal seems to be our target company. Correct? The second thing, okay, Samir, I will ask questions and answers in a while. Please be patient. It is not a good idea to put a question which does not belong to the first paragraph or something that we are discussing right now between a chat. Okay, be very relevant and try to understand that there is a group that is studying. Okay, so there is an acquirer, Campai, there is a target company, Skal. Then Campai is not a struggling company. It is a huge listed successful company and it is not its first acquisition, correct? It is successfully undertaking multiple competitor acquisitions. Skal is one of the recent targets they are looking for. And do you think that Skal is a very huge company? Or is it a very successful company? I believe reading the first paragraph and reading these words, unlisted company, sounds like it is a very, it is not a huge company. It is something, or maybe it is a normal or a small company. It is not a huge company. It is not a listed company. Okay. It is not a company that is listed on the stock exchange. Yes, there might be some more information further afterwards that may contradict, but right now it is not a very listed company. And Manu, yes, excellent. It is a good strategic acquisition. That's what they think. My company has a good reputation both with investors and also with other stakeholders. My company has a good reputation both with investors and also with other stakeholders. The company is well regarded for making a positive impact on the environment and also for looking after its employees. It is doing well financially and its share price has outperformed the market. So they again emphasize that the acquirer is a well-reputed company, correct? It is in a very good position. And they have also emphasized that they are in a very good position, not just financially, but they have a positive impact, probably CSR activities, sustainability, looking into the environment. They are not concerned with profits only. It is not a shareholder focused company. It is a stakeholder focused company. What is the difference between shareholder and stakeholder? Can you all tell me what is the difference between shareholder and a stakeholder? Can you please tell me? Stakeholders is a broader term. Stakeholder includes shareholders, debtors, creditors, loan providers, everyone. Correct? So it is a company that is looking into environmental areas. Now, do you all know that there was a recently, probably 1 or 2 years back, there was a recently added AFM topic that can be tested from this paragraph. Can someone name a recently added AFM topic that was recently added, which relates to environment? Yes, excellent, Hamad. Excellent. Now, I have made some notes about green finance. Someone who has learned those notes, maybe they may ask us in the requirement about something about green finance. So we can write something about that. Or even if they don't do it directly, we have to incorporate these. Now, there might be students who don't have notes relevant to green finance. Yes or no? Do you all have the e-notes relevant to green finance? If you have it, good. If you don't have it, you have to contact me after the session. Okay. After the session, do contact me. I will help you get green finance notes as well. All right. So after the session, let me know. I will provide you green finance notes whenever you see something relevant to sustainability, environmental impacts, stakeholder focus, a company with a good reputation in the market, some words like CSR activities, environmental activities. You have to incorporate green finance or write something from the ACCA syllabus. Impress the examiner. There is a vast majority of students who fail because they ignore theory fully. Theory is a very critical part of your AFM exam. You have to give time to theoretical area as well. Okay, so do remind me about green finance right after the session. Okay. How can we do theory? Well, just yes, I will guide in a while. Okay. All right. Moving on. Scal company is involved in the production of vehicles for the logistics industry. Now they are telling us what is actually the business of a Scal company. Scal company is involved in the production of vehicles for the logistics industry. And what is the business of Campai company? Campai company is a large listed company involved in the production of machinery for the logistics industry. They make machines for the logistic industry, and they make some vehicles for the logistic industry. So we can say that more or less the business risk is more or less same. There can be synergistic benefits. Customer base is same. Agree? It is like just like you were making televisions, and now you are acquiring a company that makes let's say DVD players, CD players. Okay, it is regarded as being an innovative company. Now, if the question asks what is the motivation to acquire a Skal company, why is such a huge company acquiring an unlisted company? One of the motivational factors is that they are innovative. They are bringing new ideas into the business, which puts sustainability at the core of business operations. Can you see strategic alliance? Both companies focus on sustainability, environmental well-being, correct? Now, trust me, this thing can happen in live classes only. If you interact, if you listen to me live, rather than just reading a document, a question, your mind is now working at 2x. Okay? All right. At the core of business operation, its most recent venture has been to establish a factory in a less developed part of the country to produce vehicles running on hydrogen power. This is considered to be beneficial for employment prospects and sustainability. Now, they are also providing us an evidence. How is this company working for environment, for betterment of society, for sustainability? So they are highlighting the fact that this company has just recently started a factory, and the purpose was to start it in a less developed area, probably to give more employment opportunity to the locals over there. Okay. All right. Now, this was your non-financial information. This was mostly non-financial information. Uh, okay, Yasir, there can be positives and negatives at every end, but they are demonstrating that they did this to give employment opportunity to the locals. Maybe there are safety precautions applied which reduce the negative impacts of a hydrogen plant. Okay, now this entire information was given to give you an idea of both companies, to give you an idea that there might be some requirement about sustainability, about green finance, about environmental activities. There might be a question about a strategic alliance, like why Campai is going to Skal. Is there any motivation, any non-financial motivation? Yes, strategic alliance. Both companies think like customer base is same, so they are going to benefit from synergy. All right. Currently, Campai companies 225 million shares are trading at $4 each. Now, I want you all to to take out of your calculators, 225 million is the number of shares. Each share is valued at 4. So the total value of all the shares is 900 millions. And what do we call this 900 million? In financial terms, what is it? In financial terms, this 900 million is, yes, it is market value of equity. All right. And its most recent profit after tax was $50 million. All right. Okay, there is a long message. Hi, sir, I'm really sorry, but I'm really keen to participate. Good, another, is there any? Yes, you will get the lecture recorded. Okay. Anyways, but taking live session is very important. It benefits. All right. Now, generally in your mergers and acquisition past papers, what are the most commonly tested topics? What are the most commonly tested topics in mergers and acquisition? Do they use PE ratio very commonly? Yes, PE ratio is very common. And what else? Free cash flows is very common. Okay. Once in the last 2 or 3 years, they also asked the dividend valuation model. But dividend valuation model is not a common topic. It is not something that is very common. PE ratio is very common. Free cash flows is very common. Okay, PE ratio and free cash flow is very common. Now, using this information as a person who, let's say, as a student, what do you think? Where is this information lending you? It is lending you towards PE ratio, correct? Only this information that I have highlighted. So can you calculate PE ratio of Campai company? How is PE ratio calculated? There are two options. Option number one, market value of entire company divided by profit of entire company. Option number two, market value per share divided by earnings per share. So here we can do market value of entire company. That will be 225 into 4, that is 900, divided by profit after tax of entire company, that is 50. So it comes out to be 18. Excellent, excellent, everyone. So now we have total pre-acquisition market value of acquirer, number of shares of acquirer, profit after tax, market price per share, and we have the PE ratio as well. Camai Company's Board of Directors BOD is proposing that a Skal company is acquired. Now we are thinking, how will we acquire? How will we pay them? How will we compensate them? If we are acquiring something, how will we pay them? How will we acquire them? Number one, either through a cash payment of $8 for each Skal company shares. Okay. Now, what is the benefit, one advantage and one disadvantage of cash acquisition? What is the one advantage, one disadvantage of acquiring a company based on cash basis? Advantage and disadvantage. Advantage, no dilution of controls. You just buy a company. They are now not the owners of the company. You have paid them cash and you have bought everything, said bye-bye to them. There is no dilution of control. They will not be our shareholders anymore. But the disadvantage is that there might be liquidity issues. You may not have cash. You may have to arrange cash and you have to pay to them. Okay. So one advantage and disadvantage, and again in the 67 pages booklet, if someone has read the 67 pages booklet, they know that this advantage, disadvantage was covered over there. Agreed? Okay, moving forward, the second method given to us is or through a share for share exchange where a number of Skal company shares are exchanged for a number of Campai company shares such that additional value created for from Skal company's acquisition is allocated 50% to Skal and 50% to Campai. Now, what is one advantage and one disadvantage of share for share exchange? Opposite. You don't need cash. You are just giving a document, an ownership. Okay. But disadvantage is dilution of control. Now, these will also be shareholders of the new company. What is one more method that is commonly tested in past paper? Anyone? Is there any other commonly tested method? Okay, mixed and bonds. Which bonds? Which bonds? There are some past paper in which some yes, excellent, Hamad. So generally, the three most commonly tested techniques are cash, shares, and convertible bonds. Okay, not the normal bonds. Generally, it is noticed that in the examiner focuses on convertible bonds. Okay, so cash, shares, convertible bonds. These three instruments are most commonly tested. But in this question, there are two only. Okay, will this condition of 50-50% benefit apply to the cash offer as well? Will this condition apply to the cash offer as well? No. That's why it is written over here. Now, it is a very common exam mistake that in a hurry, you distribute the benefits 50-50% for everything. That's not the case. For cash offer, it's different. What is it? We don't know right now. For the shares offer, it is that the additional value created, the synergistic benefits created will be distributed 50 to each party, 50% to Campai, 50% to Skal. Okay. All right, moving on. Chemi Company's BOD has held initial positive discussions. Positive discussions. Now, are there any cases in which we, in the past papers, we have negative discussions? Are there any cases in which we have negative discussions? Do we have such cases in past paper in which the board of directors of the target company are not willing to sell themselves? Yes. And which theoretical area comes in place in that case? In that case, which theoretical area comes in place? Hostile or defensive takeover strategies, Peckman defense, crown jewel. Do you all agree? And there is one, yes, golden parachute, Pac-Man defense, selling the crown jewel. So do we need to learn those? Yes, they are included in the 67 pages booklet. And if the board of directors are unhappy, they are unwilling to sell their company, they don't want their company to be sold, you have to focus on that theoretical page. Poison pills as well. It is in the 67 pages booklet. But right now, if you write that, you will be giving a very bad impression to the examiner, because in this specific case, the directors of the target company are happy to sell them. That's what they are writing. With the Skal company's BOD and the majority shareholders, Skal company's BOD and majority shareholders have indicated that a premium on the current value of a Skal company of at least 25% for the cash offer or 33% for the share offer will be acceptable. This will be in line with market-based premiums paid for recent acquisitions. Now, what does premium mean? What do they mean by premium? Can someone elaborate? Amount over the value. Amount over which value? Amount over their current value. Amount over their current value. Okay. For example, if I say that one share of, a Skal company is has a market value of $8. For example, if I say that one company or one share of a Skal company has a market value of $8. So a premium of 25% means how much do I have to pay? $10. I have to pay 2 rupees premium, and they will be willing to sell their company at a per share value of $10. Okay. Now do remember, premium and synergistic benefits are not same. Premium simply means how much extra they want above their existing market value. So for example, I don't know the actual data right now, but for example, if one share of a Skal company is available in the market, or the market value of one share is $8, and if they need a premium of 25%, this means that they are willing to sell their shares at $10. Okay. All right. Skal company's pre-acquisition valuation. Skal company has 40 million shares. It has $80 million of long-term debt on which interest is payable at an annual rate of 6%. Okay. Skal company's most recent PBIT, profit before interest and tax, was 26.3 million. After deducting $16.2 million tax allowable depreciation and other non-cash expenses. Skal company makes an annual investment of $14.1 million in non-current assets and working capital in order to continue its operations. Okay. Now, how many of you know the concept of necessary capex? How many of you know the concept of necessary capex? Correct? You all have completed them in the regular sessions. So what do we do with necessary capex? We have to subtract necessary capex, correct? We have to subtract necessary capex. Okay. Then in the free cash flows topic, which is available on the portal, the handouts are available in the 67 pages booklet. We did two methods to calculate free cash flows. Okay. It is estimated that a company's cash flows will grow annually by 4% for the foreseeable future, and its cost of capital is estimated at 11%. Small companies' annual corporate tax is 20%. Okay, so this is probably the only pre-acquisition values that we have. Now, how many of you think that this question belongs to free cash flows to equity? And how many of you think that this question is from free cash flows to company? Is it free cash flows to company or free cash flows to firm? Or is it free cash flows to equity? Okay, why? Reason. What is the keyword? How did you get to know that the question is about free cash flows to company? Because we are given cost of capital. Because we are given cost of capital. For free cash flows to firm, for free cash flows to company, we need cost of capital for discounting purpose. And for free cash flows to equity, we need cost of equity. Okay. So now, if I am talking about free cash flows to company or free cash flows to firm, and I discount the cash flows using cost of capital of 11%, I will get a value. What will that value represent? Will it be value of equity, value of debt, or what? It will be value of company, which includes value of debt and value of equity both. Okay. When I use free cash flows to company model, I get value of company. Value of company means value of debt and equity both. But when I purchase a company, I pay all assets minus all liabilities. I pay net equity. So what I will do is that using the free cash flows to firm model, I will calculate value of company. After calculation of value of company, I will subtract this long-term debt. Do you all agree? Do you all understand? I am talking to those students who have reasonable knowledge. Okay. So free cash flows to firm or free cash flows to equity model operates on the basis that you first calculate the entire value of the company, then you subtract the value of debt, so you get the value of equity. Okay, one more question. One more very important question. The value, listen to my statement. The value of calculated using free cash, the value of equity calculated using free cash flows to firm, the value of equity calculated using the free cash flows to equity will be same. Yes or no? If I calculate value of equity using free cash flows to firm model, and if I calculate value of equity using free cash flows to equity model, will both values be same? Our mind says yes. AFM says no, they can be different. Okay, don't have a misconception that the values will be same. I repeat my statement. The value of equity calculated using free cash flows to firm will be equal to value of equity calculated using free cash flows to equity. No, they will not be equal. Okay. Some of you might be thinking they must be equal, they are supposed to be equal, they should be equal. Mathematically, it seems they must be equal. These are two different models. The value calculated using earnings yield method, the value calculated using dividend valuation model, the value is calculated using PE ratio model, the value calculated using net assets valuation model, the value calculated free cash flows to firm model, the value calculated using free cash flows to equity model will be different. These models operate under different assumptions, under different scenarios, or you can say that based on different facts, based on different assumptions, to be precise. Okay, so they will not be equal. Don't please mix this thing, because they both seem similar. Our mind says this is value of company, it includes debt and equity, and this is value of equity, so they must be same. No, 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 they will not be same. Okay, is it clear? Now let's move forward. Okay, so over here, the question is suggesting that we use the free cash flows to firm model, calculate value of company, subtract value of debt, and come up with value of equity. Moving forward, Skull companies post acquisition value. Skull companies post. Why skull company? Why not merged companies? Now, there are two types of cases. Again, can someone tell me why they are saying skull companies post acquisition value? They are not merging. Okay. They sometimes what happens, you acquire a company. Let's say I am Campai. I acquired Skull, and now I am valuing Skull itself. Like I am acquiring something and I am valuing that acquired portion only. Sometimes what happens that I acquire another company and then I value the entire company. Okay, there are two types of questions. You may not have noticed because you have a limited time to study AFM. I have been teaching for a long time. If you check West Parlay Company, I believe West Parlay is one of the questions in which we did not calculate the total value of acquirer, target, synergy. But what we did is that we valued target and its synergy. Am I able to differentiate? Sometimes in the question, you are valuing the entire new company, which includes acquirer's value, target's value, synergistic benefits. So it is acquirer, target, synergy, acquirer, target, synergy, acquirer, target, synergy. But sometimes in the question, it is only target and its synergy, target and its synergy. Is it clear? Both types of questions are tested. Okay. So over here, it says Skull companies post acquisition value. Skull companies post acquisition value. Okay. Yasir, wait a while. Just a while. Okay. If the acquisition goes ahead, means if Campai acquires Skull, due to increased efficiency and reduction in duplicate costs, Skull company's profit after tax is expected to increase by 4.8 million annually. Increase by 4.8 million annually. This is one thing that will happen. So, where is Skull company's profit after tax? We can calculate it. How can we calculate the Skull company's profit after tax? Let's go above. Do you have profit before interest and tax of Skull company? Yes or no? Do you have profit? Correct, you have it. Now, what will you subtract it? What will you subtract from here? What will you subtract from interest? Okay. How will you calculate interest? 80 million is the amount of long-term debt on which you have to pay an interest of 6%. So take 6% of 80. Please, everyone on calculators, 80 into 6%, 80 into 6%, 4.8. Now 26.3 is PBIT minus 4.8. 26.3 is PBIT minus 4.8. How much are you left with? Is it your profit after tax? Is this your profit after tax? Yes or no? No. What further needs to be subtracted? Tax. So what is the tax rate? 20%. Either apply, yes, Hamad, correct. You can directly take 80% of PBT. You can directly take 80% of PBT or take 20% and subtract 20% from it. So 17.2, excellent. And now add 4.8. Now add 4.8. Why add 4.8? Because they are saying that the SCAL company or the target company's profit after tax is going to increase by 4.8 million. Okay? Is it clear? And then it says, if the acquisition goes ahead due to increased efficiency and reduction in duplicate functions or duplicate cost, SCAL company's profit after tax is expected to increase by $4.8 million annually, and its price to earnings ratio is expected to be the same as Campai company's current PE ratio. So we calculated Campai's company's PE ratio, 900 divided by 50, if you all remember, 18, correct? We calculated it using this data. We calculated it using this data. So 18 multiplied by the new PAT. But there is some more information. Additionally, there will be an immediate one-off increase in cash flows of 42.3 million from the closure of SCAL company's recently established factory, which is producing hydrogen-powered vehicles. So do you think that you have to multiply 22 with 18? Or do you think that we need to add 42.3 into 22 and then multiplied by 18? 22 multiplied by 18 or 22 plus 42.3 multiplied by 18? Hamad says 22 multiplied by 18 and then add 42.3. What do you all say? Do you agree with Hamad? Why is Hamad saying that we will add 42.3 separately? Yes, it is a one-time gain. If I will add it in my regular profits and multiply it by 18, it will give a multiple impact. It will be as if my regular annual earnings were increased by this amount. Okay, that's why it is clearly stated over here as well. One-off increase, one-time increase. This increase was for only one time. If there is a one-time layoff, one-time redundancy cost, one-time asset disposal earnings, we add them separately one time only. Because if I make them part of our regular profits, and then multiplied by 18, so it will be as if my regular profits were this much. But is the treatment same in financial accounting? Is this the same treatment as in financial accounting? Do we do same thing in financial accounting? If there is a gain on disposal, do we add it in profit after tax? Yes or no? Yes, in financial accounting, our purpose is not to value a particular company. So in financial accounting, if the profit after tax is as per financial accounting, you can see that we add gain on disposals. Agreed? Now from here, what I was thinking that what ACCA has not tested is that they may give you profit after tax as per financial accounting, tell you that there was a one-time gain on disposal of XYZ amount. So what you will do, you will adjust that profit after tax, then multiply by P ratio and add it back. Am I clear? This can be tested. This angle can be tested. Agreed? They can give you profit after tax and they say that this profit after tax is as per financial accounting records. And there was a one-time gain of 10, 20, 15 included in this. So, okay, not clear. Okay, listen carefully. Let's say there is a financial accounting profit of 50 million. there is a financial accounting profit of 50 million. It includes a gain on disposal of 5 million. And P ratio is 10. So the right technique is 50 minus 5. This will give you 45. These are your regular profits multiplied by the P ratio of 10, 450, and then add the 5. So it will be 455. How many of you do understand this? Rewatch this part of the video. Yes, there can be any sort of adjustment, but I was just giving you an idea that this type of concept is yet to be tested. Okay, they can give you a reverse working. All right, let's move on. My company has minimal spare cash resources. Oh my God, minimal spare cash resources, and it is very close to breaching its current debt covenants. The BOD thinks that acquiring a small company for a cash payment will be challenging. So this is mentioned over here so that you can write something about theory that acquiring cash is difficult, or maybe in your question you are supposed to compare the cash and the share for share exchange offer. So you can write that in case of cash offer, you will need to arrange funds and it might be difficult and everything like that. So you can suggest, you in the report can suggest to the BOD of Campai that acquire Skal company based on share for share exchange ratio, because you are struggling with cash, you don't have sufficient cash, you have debt covenants as well. So it might be very difficult for you to acquire a Skal company using cash. However, on the other side, you will also mention that giving the shares to them will mean dilution of control. Camai Company's finance director has suggested that a mixed offer should be considered as well. The FD thinks, or FD means finance director thinks, that offering some cash and some Camai Company shares to acquire a Skal company would be better choice for Camai Company. So this is one more suggestion, a mixed offer. Skal company has a recently established factory producing vehicles which uses hydrogen power. Camai company's BOD is of the opinion that this factory is not financially viable and does not align with Camai company's strategic direction. It is therefore thinking of shutting the factory down once a Skal company has been acquired. And this closure is expected to generate an immediate one-off increase in net cash flows of 42.3 million. So effectively, this is the same amount that was mentioned above. But having said that, don't you think that this was the same factory as we talked about something over here? Agreed? So yes, Hamad, excellent. Although financially it is not beneficial to run that particular plant, but once you set up something which is a positive environmental impact, once you started a CSR activity and then you withdraw from it, there might be a non-financial loss of reputation, goodwill, and people may see your company negatively. Agreed? Agreed? So why they have mentioned this over here is to help you draft theoretical area of the question. An internal memo about the possible closure of the factory was obtained and published by the popular press. The resultant reaction from the media and the general public have been negative. This negative reaction centers around the job losses in an area which is less developed, and this disclosure will be a step backwards for sustainability. Newspapers have been particularly vocal in their criticism, suggesting that Camai company would be going against its core business values and destroying its reputation. As we discussed that it is going to discuss the business reputation, it is going to reduce our goodwill. Okay, there might be non-financial losses. Camai company's BOD is very concerned about this development. One director suggested that Camai company should not close the factory. Another director suggested that Camai company should not proceed with the acquisition at all. Overall, Camai company's board thinks that these suggestions may not be viable and has asked for advice on what actions could be taken to the negative reaction. Okay. Now, what was the requirement? Prepare a report for the board of directors of Campai company, which includes Report, 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 report. Very, 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 very common. And today we will see how we will theoretically write the report. Report is very important. Generally, question number 1 is about report. 99.99% it is report, in fact. And we will see how to write report. In the exams, you will have a WordPress and a spreadsheet. Will you first write the report or will you first do the computations in a spreadsheet? What is the correct approach? Computation. Because what you compute needs to be incorporated in the report. Correct? So now an estimate of combined companies price to earnings ratio and the additional equity value generated from the acquisition. This is a computational part. This needs to be done in your spreadsheet. An estimate of the percentage gain in shareholders' wealth for combined Scale company shareholders under the cash offer. This is again a computational area. An estimate of the number of combined company shares allocated to Scale company shareholders and the percentage gain in shareholders' wealth for combined and Scale company shareholders under the share for share offer. This is again a computational area. So 8 and 4, 12, 12 and 7, 19. A discussion of the acceptability of the cash and share for share offer to Campai and Scale company shareholders. Now, how do you decide whether something is acceptable to shareholders or not? Can someone put in some comments about this? Okay. In this particular question, where you given certain benchmarks, Scale company shareholders mentioned that they will proceed with the acquisition. Scale company shareholders mentioned that they will proceed with the acquisition if these targets are met. Okay, Darsh has a very quick but a very long question. Sir, I have a quick question before we begin answering. For question 1, I was looking at the answers format and it says towards the end of the report. Okay, Darsh, you need to wait. Calm down, relax. I am not running anywhere. We will be discussing the report, and when we do and when we come to reports format, you can ask the relevant question. I believe right now it is not a relevant thing to ask because we have not moved to report. We have just discussed the question. So calm down, relax, be patient, let the time come. And then if you have any relevant question, sure, you can ask. Okay. Right now we are discussing something. It actually disturbs the entire class. It disturbs me a lot because I have to look into the screen in the chat. So we are going to come to that part. And when we discuss the report, you can put your doubts relevant to the report. Just wait for a while. Okay, so Scale company shareholders gave you a benchmark. They said that they will go for the acquisition if they get a 25% for the cash offer or 33% for the share for share offer. Anyway, so this is a discussion part, and this discussion part will be done in the spreadsheet. Obviously, there will be inputs from the first 3 parts into the report. Then a discussion of the financial issues faced by Campaign when acquiring Scale by cash and briefly conclude whether a mix offer would be better choice. Note no additional calculations are expected here. Why they have mentioned this specifically? Because in some questions, they do ask you mix offer computations as well. But this time they just want you to discuss a discussion of how Campaign company's BOD might address the negative comments made about the factory closure, 7 marks. And then you have professional marks, which will be awarded for the demonstration of skills in communication, analysis and evaluation, skepticism, and commercial acumen in your answer. Okay. Right now, I have discussed this question entirely. We have to discuss its answer, report, professional marks. So you have to be with me. Are you all with me? Was the reading of the question beneficial? Yes or no? I hope you did enjoy the session till now, correct? All right. Now, the first thing that we need to discuss is how the marks are given to you. Okay. So this is the ACCA answer. Again, if you don't have this document, you can ask me. At the end, you have a marking scheme. Now, let's just first understand how the marking is done. Because if we understand how marking is done, we will write better. We will know how we have to go forward in writing the answer. So as you can see, the first part was computational. Now everything has a mark. For example, if you compute the P ratio of Campai company, you get 1 mark. If you complete the free cash flows to firm of a Skal company, you get 2 marks. If you calculate company's value, you get 1 more mark. You get 1 more mark for equities value. You get 1 more mark for calculation of after-tax earnings. You get 1 more marks of for calculating the equity value after acquisition, and then you get additional equity value generated 1 mark as well. But if we see the question, what was the question? What was the question? The question specifically asked us 2 things only. The question specifically asked us 2 things only. First thing was what? An estimate of Campai company's PE ratio. An estimate of Campai company's PE ratio. If you calculate PE ratio, this is one thing I want. And the additional equity value generated from the acquisition. If you don't see the marking scheme, someone may say that there are 8 marks. So there are 4 marks for this, 4 marks for this. But this is not like this. Okay. If you check the marking, what are the marks given for this first particular part? 1 mark only, because it was a very easy computation. It was a very easy computation. So you are just given 1 mark. So even if I see this question, there are 2 parts. This is the first part for 1 mark. This is the first part for 1 mark. And this is the second area or the second question for 7 marks. Okay. Do you all agree? I hope I am clear, loud, audible. I am visible, screen is visible, and I hope that you are enjoying the session. It is full of learning. Okay, moving on. Let's proceed. If we proceed further, what do we have? We now know that the marks are distributed like this. Okay. For the second requirement, there were 1 and 3 marks. Why 1 and 3 marks? Probably because Skal company's percentage gain was easy to calculate. You know the current share price, you know the cash offer, you can calculate the gain easily. But for Campai company, it might be a working or a tool. Likewise, you have these marks allocations. Okay, so you can see that every step has a mark. It is not like that your mistake is carried forward. If you do the first part incorrectly, yes, all the answers will be incorrect, but the examiner is still going to give you marks for each particular part. Mistakes are not carried forward in professional exams. There might be students who do mistake in the first part, but rest of all parts are correct. Logically, computationally or value-wise, they are not correct because there was mistake on first mark. So the marks will not be carried forward. Like mistakes will not be carried forward. If someone is doing a mistake in one of the first or second part, this mistake is not carried forward. Okay. Then you have marks for discussion of report. Again, assumption. Very, 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 very common in AFM. They love to sometimes directly, sometimes indirectly ask you assumptions. Now you can see that they have given you 2 to 3 marks to write assumptions. Okay. Yes. Yes, Gaurav. Okay. Moving on. Then they have in report, what must you write? In report, what must you write? Okay. So I actually want you to understand the marking scheme before drafting your answer. Now for professional marks, this guideline is very important because you have 10 professional marks. Agreed? You have 10 professional marks in your exams. In your exams, you have 10 professional marks. Number 1, they say that the first area is communication area. What is it? General report format and structure, use of headings, subheadings, and an introduction. You need to write an introduction paragraph. You need to put proper headings wherever necessary. You need to put proper subheadings wherever necessary. Style, language, and clarity, tone of report, response, presentation of calculations. Presentation of calculations have their own marks. Trust me, every time when I check some of the spreadsheet files in the mock exams, it is a big pain for me. And many students who fail on 47, 48, 49, 45 can easily pass if they present their spreadsheet calculations neatly, nicely, properly aligned. This is very important. Appropriate use of the tools, easy to follow. Easy to follow means that the sequence must be good, like you are doing all the workings horizontally or vertically. It must be not like that you did one working over here, the second one over here, the third one over here, and the fourth one over here. No, they will deduct your marks. Actually, professional marks is a technique to help examiner check their papers. If they see someone has done things randomly everywhere here and there on the spreadsheet, they simply ignore it and they can deduct your marks. They have 20 professional marks in your paper. Okay. And more than a negligible amount of content, effectiveness of communication answer is relevant, specific, not general, rather than general and focused to the requirement. Do you all understand this communication area? Any confusion? If there are 10 marks for 4 professional skills, there are 2.5 marks for this area. Okay, does it affect the technical marks as well? What do you mean by technical marks? There are professional marks. These are professional marks. Okay. Yes, Hamad, I will. Okay, analysis and evaluation. Appropriate use of the data to determine the suitable calculations. For example, if you are calculating P ratio, market value per share, you use the data of the question appropriately. Appropriate use of the data to support discussions, draw appropriate conclusions, and design appropriate responses. So the calculations and their responses both are linked. You are calculating something and then you have to write its response in the report. Can you say the common assumption? Yes, I will, Radhika. We will do it today. Balanced appraisal, use of information objectively to support opinion, determine the impact of a course of action, and make a recommendation or decision. Not only that you have to give appraisal, but you have to make a recommendation, you have to give a decision, you have to objectively check the information and everything. Skepticism, effective challenge of information, evidence, and assumptions applied in techniques carried out to support the key facts and or decisions. Effective challenge and critical assessment of the information, evidence, and assumptions provided, including identification of contradictory evidence and ongoing questioning of the reliability of the information and evidence provided. Okay, can someone briefly or in one word, what is the one word for this entire 2.5 mark, 2.5 professional marks? What do they expect you to write in the report? What is a one word questioning mind? Questioning. Okay, well, you can say that, but one very common word that I also emphasized: assumptions. Okay, so assumptions is inherent part of your report. Even if they are sometimes, listen carefully, sometimes if you see a 50 marks question past paper, you will see that they will directly ask you, write assumptions about XYZ calculation. But even if they don't write, there are 2.5 marks for assumptions. Okay. What is one very common assumption? We assume that the tax rate will never change throughout the years under discussion. Agreed? So this is the assumptions paragraph. Okay. No, assumptions must be linked to the scenario. Sometimes some assumptions are not valid. You can learn the assumptions. You can learn most common 10, 20 assumptions. But for example, the question that we are doing today, it does not have a time interval. It is not an investment appraisal question. So we cannot write any assumption relevant to time interval. Okay. All right, Sam, we will do it. We will do it. We will be writing the assumptions. Commercial acumen, effective use of examples and calculations from the scenarios, information, and other practical considerations related to the context to illustrate points being made. Recommendations are practical and plausible in the context of Campai company. Okay, I highlighted something. I highlighted a topic that you can write in your report. Whenever you see sustainability, environmental reporting, what was that topic? Some recently added green finance. Okay, so isn't it commercial acumen? They are saying effective use of examples and or calculations from the scenarios information and other and other practical considerations related to the context to illustrate points being made. Okay, yes, you can write something linked, but obviously it must make sense. It must not be a very random thing out of the box. It must be something specific. Okay, recommendations and practical and plausible in the context of Campai company. It must be linked with Campai company. So for example, over here they emphasize on sustainability, environmental reporting and everything. You can talk about some CSR things. You can talk about green finance. You can talk about integrated reporting to some extent. I hope you all understand integrated reporting. So this is how you get your professional marks. And believe me, professional marks are 10 marks for a report question and then 5 marks for each of the second and the third question. So these are not something you take for granted. These marks are not something that you take for granted. They are important for you. Do you all agree? There is an importance of professional marks. I mean, if you, let's say, score 15 professional marks or 12 or 13 professional marks out of 20, this means that you just need probably 35 out of remaining 80 marks. So this is a free gift. Just that you have to understand what they want. What is their expectation about professional marks? If you understand that expectation, for example, one of my students failed last time by 2 marks. And when I inquired, he told me that he did not write assumptions in the report because there was no such requirement. Don't you think that if he followed these professional marks, he could have passed easily? He was at 48. He was at 48. He never mentioned any assumption. He never had a questioning mind. And maybe the examiner did not give him 2.5 marks or 2 marks from here. He could have easily passed. So there is a very narrow line between 45, 46, 48, 49, 47 and 50. 50 is a pass, 48 or 47 or 49 is a fail. So these professional marks are not to be ignored. They need to be understood very clearly. Even on the paid portal, I have some lessons from ACCA directly connected to your portal. And then there is a professional marks document. I prepared a 2 to 3 pages document. How many of you have read that document? Or how many of you have seen the professional marks video from the portal till now? Have you guys done that? Okay. Do read it if you haven't, because once you read the document and once you see the videos, you will be in a better position to do these things. And trust me, 48, 49, 47 is a big pain. Okay, some of you might have scored 48, 49, 47. It is a very big pain. Okay, Sarah, I will give it to everyone. No, Daniel, it is not covered in the 67 pages booklet. It is a separate document. Talk to me after the session. There are a lot of documents uploaded on the Google Drive as well. And there are a lot of documents that are on the portal. So on the portal, I have put the videos, but the document is free and open for all. I can distribute the PDF document. Videos relevant to the professional marks that are connected with ACCA are on the portal. But do understand that there are 20 marks. Okay, you can see last time I also stuck at 48. Manu, I can feel your pain. There are a lot of students, to be honest, they cry on the day of result. Why 48? Why 49? I can feel the pain, Manu. And to be honest, there are there are very, very, very slight mistakes that you made in your mistake and one you made in your paper, and one of them is the ignorance of professional marks. All right. Now, moving to the computational area, sir, I am solving question, but not entirely correctly. Somehow correctly. Do you think I will be able to go with the understanding? All right, let's talk about this, your general query a bit later. Let's first focus on solving this entire June 2025 exam paper. Now, what I will do is that I will take you to the spreadsheet file and show you some computations, how I have computed. Are you all together with me? Was whatever we did, was it beneficial till now? All right. Let me open the computational area for this first question and let's discuss the computations first. Let me share the screen once again. All right. You all will get this sheet as well. This sheet is prepared for everyone. Now, let's go through the computational area quickly. One important fact that was highlighted in the professional marks was that the layout must be user friendly. Okay. So what layout have I followed? Horizontal or vertical? You can either follow horizontally, you can either follow it vertically, but it must be step by step. Gives a good impression, helps the examiner to check your exam paper quickly and easily. So what I myself prefer, which looks neat to me, I try to put a heading for whatever I'm doing. I try to put a box, a border, and then I put relevant information within this specific box. There is a option memory, I believe. I will connect you with Benson, one of the students who got 82 marks in the last session. So you can consult with him. Even if you don't get an option to put boxes, although it is in the alignments, I believe, but even if you don't get an option to put a box, you can still make it clean. Like just put a proper heading. If I don't draw a box, but I have a heading, a proper bold heading for what will be presented over here, it will be neat and clean. It will be considered good. So over here, what I have done, this was the number of shares, market price per share, profit after tax. This information was given to us. I calculated EPS or earnings per share. Earnings per share is PAT or profit after tax divided by number of shares. Okay. Then we calculated the PE ratio. Okay. What I did is that I did market price per share divided by earnings per share. But another method is the total market value of entire company divided by profit after tax. And this is the total market value pre-acquisition. Is this clear to everyone? I hope that we have discussed the question in a great detail. So now this must not be an issue for you and it must be clear. Is it clear for everyone? Do you all get this? We need to be very quick. We have already spent 1.5 hours on discussion of the question. Okay. Second thing is the calculations of free cash flows. Now there are two formats. Refer to my free cash flows handout. The formats are over there. There was one format in which we applied tax rate on PBIT. So what I did, PBIT was given to me. I applied tax rate on PBIT. Depreciation is added back because it is a non-cash expense. Necessary capex is deducted. So we come up with free cash flows to firm. Okay, Syed, if something is not relevant, okay, let me read. Syed, got to know from an examiner's report that the information which is already mentioned in the question, there will be no marks for mentioning them again. Yes, you can directly do it. But actually what I do is that I connect the values. Okay. Now, if I have to connect the values, for example, writing these three values helped me to calculate EPS directly. It helped me to calculate the PE ratio directly. It helped me to calculate the market value directly. So rather than typing the values again and again, isn't it better that we type them once and then we can link our future sales with it? Okay, so this is your free cash flows to firm. Now this stands at year zero. This stands at year zero. In order to calculate the value of company, it was mentioned in the question that these free cash flows will grow at 4% every year, and we were given cost of capital of 11%. Okay, sir, why interest is not deducted here? Interest is not deducted here because number one, we are not using free cash flows to equity method. This is free cash flows to firm method. Do you understand that both methods are different? Free cash flows to equity is absolutely different. In free cash flows to equity, you deduct interest and you use KE for discounting. Free cash flows to firm or company is absolutely different. In free cash flows to company or free cash flows to firm, you use cost of capital to discount. Okay? No, I'm not shouting, just I keep emphasizing. It helps some people to remember the concept, isn't it? It's not like just like shouting to you. Okay. All right. One more important thing. Some of you might be confused. Some of you might be confused. Why I have applied tax rate on profit before interest and tax, isn't it? So again, this is a shortcut method. This is a shortcut method. There are two methods of free cash flow that I have explained in my videos and in my notes. There are two methods. This is a shortcut method in which we directly apply tax rate on PBIT. All right. So this is the dividend valuation model formula. Just like DVM with growth, we apply free cash flows to firm multiplied by 1 plus growth rate divided by cost of capital minus growth rate. Cost of capital of 11% is given to you in the question. Annual growth rate of 4% is given to you in the question. We have used the growth formula. Why growth formula? Because in this question, it was mentioned that the free cash flows will keep on growing at 4% every year. And it was given that your cost of capital is 11%. So if cost of capital is 11%, if growth rate is 4%, so we apply this formula and what we get is value of company. Why do we get value of company? Because the method being used is free cash flows to firm method. Free cash flows to firm method or free cash flows to company method gives you value of entire company. This is value of company. When I say value of company, it includes value of debt and value of equity. And if I subtract 80 million, what is 80 million? In the question, it was mentioned that the value of debt is 80 million. So I subtracted the value of debt, that is 80 million. What have I come up with? I have come up with 263.8, and this is value of equity. Okay. Number of shares are 40 million for this company. So the per share value will be total value of equity divided by number of shares. So total value is 263.8 divided by number of shares, that's 40. It comes out to be 6.59. This means that each share of Skal company has a value of 6.59 right now, today, at the date of acquisition, and this is pre-acquisition value. Is it clear? Okay. I have also calculated PBT and profit after tax. Okay, so we won't add 23.14. No, 23.14 stands at year zero. Do you always remember, when you value a company, when you are acquiring a company, you have right on their future earnings. If a company says today I earned 100 and now I am selling this company to you, will they pay you 100 as well? Will you get 100 as well? 23.14 stands at year zero. Year zero means that at the time when you were purchasing this company, now if you purchase this company today, they have earned 23.14 and now they are selling you this company. So what you will get is earnings after first year of operation, second year, third year, fourth year. Do you understand me, Jui? That's why we have not added 23.14. Okay. All right. I have also calculated PBT, profit before tax, means profit before interest and tax. minus 80 into 6%. 80 was the value of debt, 6% was the cost of interest cost of debt. So this gives me profit before tax 26.3 minus 80 into 6%. So 26.3 minus 80 into 6% is 21.50. And then profit after tax comes up after subtraction of 20% of tax amount. So is this clear to everyone? Again, I will mark this, highlight this box. Do you all have this sheet with you? Have you downloaded this sheet with you? Yes or no? Okay, if you have not downloaded the sheet, it's available open for all, public, anyone can download. So I will provide it to you. If you don't find it, do contact me after the session ends. But this sheet is publicly available for everyone. And this finally ends us our second calculation. Now, post acquisition value. The question stated that post acquisition, your current profit after tax will increase by 4.8. This is a synergistic benefit. And PE ratio will be same as the PE ratio of Campai company. And this 438.8 is calculated as 22 into 18 plus 42.3. 42.3 was one time gain. We already know that. Do you all agree with this? 42.3 was one time gain. We have already done this calculation. So this is entirely 438.30. Yes, sure, Irfan, why not? Okay. Damelari, this is a very valid question. Yes, you have to, on top, you will write dollar in million. Okay, dollar in million, something like that. And then you can proceed with your workings. All right. Now, what is the value generated from acquisition of a Skal company is the difference between these two. After acquisition, my Skal company area or my Skal company division or my Skal company has a valuation of 438.30. 438.30 includes any synergistic benefits. Before acquisition, this specific company was valued at 263.8. So this gives us value generated from acquisition. Now, some students might be confused that in the past, we used to compare post-acquisition value with pre-acquisition value of both companies, acquirer and target. Are you confused? In many past paper questions, what you used to do, post-acquisition company's value minus pre-acquisition values of acquirer and target. Is it something that is confusing you? Listen carefully. Listen carefully. There are two types of questions. In this particular question, the information, this post-acquisition area information was given for Skal company's area only. Okay. What they did is that they are operating Skal as a separate venture. It is like I have a chocolate factory, I buy another chocolate factory, and I merge my chocolate factories. This is one option. Another option is I have a chocolate factory, I acquire another chocolate factory and keep it separate. Do you all agree? That's why in the question, when you were given information, when you were provided with the relevant information, you can see that the heading was Skal companies, post acquisition valuation. Do you understand the fact? Skal companies post acquisition valuation. This means that they have probably kept Skal companies separately. Or like it's like just like there are two options, correct? One option is that I have a chocolate factory, I buy another chocolate factory and I merge them together. Or another option is that I have a chocolate factory, I buy another chocolate factory, now I operate this and this separately, I have value this and this separately, this and this separately. Do you understand this? Is it clear? Is the confusion clear? Please. Okay. There is a past paper. I assume, I believe, I don't actually remember, but I guess it was West Parlay. If you very carefully see West Parlay, we did same type of working in West Parlay. Comparison was pre and post acquisition target value comparison. So over here, they were saying that Skal company was operating at 263.8 million valuation. When you will acquire it, this Skal company's region, division, area, business unit will now be worth 438.30. It will be your company, so you will gain 174.51. Don't do the mistake of 438.30 minus 263.8 minus 900. One of my students did this mistake in last attempt. Okay. Do you understand what I am saying? Is it clear? Please, everyone participate in the chat box and let me know. This is very important because this is going to destroy your dream of clearing AFM in the first go. Okay. Shall I repeat once again? Let me repeat once again. Mukesh, you have a chocolate company. You acquire another chocolate company. This chocolate company has a valuation of 263.8. But you know that after acquisition, the value of this company, this area only, this strategic business unit only, this division only will be 438.30. So effectively, the gain is 174.51. Okay. All right. Moving forward, now we have cash offer. There is a Skal company. Pre-acquisition share value is 6.59. We calculated over here. And our consideration is 8. Correct? It was mentioned in the question that one of the areas, survey, sir, so when do we add the current years? Dipti, it's an old query now. Let's move on. You will watch the recording and let me know on the WhatsApp. Let's be focused over here where everyone is. Okay. So before acquisition, each share of Skal company was valued at 6.59. We have offered them to buy each of their shares at $8. So effectively, every shareholder is selling their shares at a gain of 1.41. Is this clear? Every shareholder is actually getting a gain of 1.41. If there is a cash offer, every shareholder whose shares were valued at 6.59 is getting payment of $8 from us. So it is a gain of 1.41. In terms of percentage, the gain is 1.41 divided by 6.59. Is it clear to everyone? Quickly, please, I need participation. I want you all to participate. Okay. Now tell me, this comes out to be 21.3%. What was the target? What were they aiming? What were they aiming? We read it in the question, 25%. So will they be willing? Do you think they will be willing to give you the company? No. Okay. And you can write theory with this comparison. Okay. Gain attributable to Skal company shareholders, they are being paid. Okay, let me repeat, Radhika. Radhika, in the question, it was mentioned over here in this paragraph. Kempai Company's BOD has held initial positive discussion with the Skal Company's BOD and the majority shareholders. Skal Company's BOD and majority shareholders have indicated that a premium on the current value of a Skal Company of at least 25% for the cash offer and or 33% for the share offer would be acceptable. They were asking you to pay a premium of 25%. Premium of 25% means they were asking you to pay them 25% above their current value. They were asking you to pay 25% above their current value. Currently, their shares are valued at 6.59. How much they were asking you? They were asking you to pay 25% above their current value if it is a cash offer. So 6.59 is their current value. What are they expecting you to pay them. Radhika, can you please calculate 6.59 plus 25% of 6.59 or 6.59 multiplied by 1.25? Correct? Agreed? It will be 8.24 or 25. And what are you offering? You are offering 8. So what I am saying that they will not be willing to sell their company to you, because what they want for every share is 8.24 and what you are giving for every share is $8. Do you all agree? Another method is that you compare what extra you are giving and then you compare the percentage to percentage. So they are getting 1.41 extra over 6.59, which is 21.3%, which is below the target 25%. Okay, now if I am paying 1.41, for each share, if I'm paying 1.41 extra for each share that I am acquiring for this company, and there are 40 million shares, I'm paying 56.21 extra to them. The total extra or the total gain was 174.51. Out of this, 56.21 gain is being given to Skal company's current shareholders. So what's left with me is 118.30 gain. And in terms of percentage, over my current value, it is a growth in value of 13.14%. Do you all agree? Is this understandable? Any confusions in this cash offer? Please ask me right now rather than when I move forward. Quickly, everyone. Okay, what specifically do you want me to repeat? Listen, total gain was 174.51, agreed? Okay. We are paying 1.41 extra for every share. We are paying 1.41 extra for every share. We are buying something worth 6.59 for 8. We are buying something worth 6.59 for 8. This means that we are paying 1.41 extra, or our outflows are more. We know that after acquiring, we will get certain benefits, but for the moment, we are paying them extra over the normal value. We are giving them 1.41 extra for every share. There are 40 million shares. So for 40 million shares, we are paying 1.41 extra. This means that we are paying them 56.21. Agreed? Yes or no? This means that we are giving them 56.21. The total benefits were 174.51. So out of 174.51, if I am giving them 56.21, I will be left with 118.30. Okay. So this is the gain attributable to Campai company shareholders. Do you all understand this? Or do you want me to explain it in some other way? And then the percentage gain is gain divided by the original value. Percentage gain is the gain divided by the original value. So you are getting a gain of 118.30 over the original value of 900. Okay, let me explain it in one more way. Pre-acquisition, there is Campai company, there is a Skal company. Value of Campai company is 900. Value of a Skal company is how much? Value of a Skal company is 263.8. So the value of both companies, was 1163.794. Do you understand this? Quickly. I'm doing one alternate working for those students who did not understand the first working. Pre-acquisition value means that before acquisition went ahead, Campai company's total value was 900 and Skal company's total value was 263.79. These were two different companies and their total value was 1163.79. Now, what will happen post acquisition? post acquisition value of the entire new company will be this 900, this 900, sorry, this 900. Post acquisition value of this entire company will be this 900 plus this 438.30. Why? Because this is the new post acquisition value of Scala company's region. So the post acquisition value will be 1338.30. Do you all agree? What I have done, 900 plus the new post acquisition value of Scala company. That's it. So this comes out to be 1338.30. What is the gain? What is the gain? Gain is this minus this. Correct? What you used to do. Now what I have done is that I have changed the mode. I have merged. I have assumed that we were given a question in which we were calculating the merge value. So the gain is 174.5. Okay. Post minus pre. Post minus pre still gives you the same amount of gain. Is it clear? Is it clear? Now, this post acquisition value will be the value of the new company. But in order to, listen carefully, will this belong to Campai or Scala? In case of cash offer, whatever we have calculated will belong to Campai or Scala? Campai. But can you tell me, is any consideration subtracted till now? Is any consideration subtracted till now? Is there any consideration subtracted till now? This is post acquisition value without subtraction of consideration. But if I pay cash to someone, payment of cash means an outflow for me. Payment of cash means an outflow for me. Do you all agree? Okay, how much cash is paid? How much cash is paid? I bought their 40 million shares. And for each share, okay, I bought 40 million shares and for each share I paid 8. I bought 40 million shares and for each share I paid 8. So I paid 320. So my net gain, if I think from Campai company's perspective, my net valuation will not be 1338.30 because when I pay cash, there is an outflow of resource. There is an outflow of asset, reducing my value. So my net gain or my net incremental or my net new value will be 1018.30. Net new value for Campai. Do you all agree? Now, what after entire transaction, after acquiring the company, after getting the synergistic benefits, after payment of consideration, I will say that I have grown in value from 900 to 1018.30. Do you all agree? On net basis, I will say that I acquired a company, I got a synergistic benefit, but I also paid cash consideration, which was an outflow for me. Outflow of assets decreases my valuation. So on net basis, after payment of consideration, my valuation stands at 1018.30 as compared to pre-acquisition value of 900. The net gain to me is 118.30. You can see, are these two values matching? This and this, this and this. Got my point? Is it clear? Is it clear? Okay. One more thing. For Scala company, Scala company, they will say that they got 320. They've got 320. They received 320. Correct? What they sold? They got 320 million consideration in form of cash for selling a company worth for selling a company worth how much? Yes, 263.7. So for Skal company shareholder, they will say that they sold this company worth 263.79 million at a certain premium for 320, and their gain is 56.1. Can you see this? Is it better now? And how can I calculate percentage gain? This is gain for Skal company shareholder for selling a company worth 263.79. So in terms of percentage, it is 21.3%. For Campai company shareholders, this is the gain. This is the gain. For value, a company valued at 900, this is the gain. All right, let me not delete it, but I believe on the drive, these workings are not present. Anyways, I will try to replace the file. Okay. Do you now understand? Is it more logical? It's like I did it in a different manner. I did it in a different manner. One of these two will work. Okay. Okay. Consideration, Sumana, it is given in the question. It is given in the question, Subhana. If you read the question, it was mentioned over here, either through a cash payment of $8 for each Skal company share. Okay. So you were given the consideration. All right. Let's move forward. Let's proceed. Let's proceed quickly. This is now share for share exchange. In case of share for share exchange, it was mentioned that whatever synergistic benefits you have, you will share those synergistic benefits equally between yourself. So the synergistic benefits were 174.51. 50% are being shared by Skal company. 50% are being shared by Skal companies shareholders, share of gain, and the rest 50% will be shared by Campai company shareholders. Is it clear? Again, it is something that was mentioned in the question that the total gain is 174.51. Out of this total gain, 50% will belong to Skal company shareholders and the rest 50% will belong to Campai company. Is this to everyone? Makes sense? All good? All perfect? Do you all agree? Do you all agree? Do you all agree? 50-50%. 50-50% is distributed to each type of shareholder. Moving to value of shares of existing shareholders. Now the existing shareholders of Campai company will see that their shares were previously valued at 900. Their shares were previously valued at 900. Due to this share for share exchange, their shares are now valued at 987.25. I repeat, their shares were previously valued at 900. Due to this transaction, their shares are now valued at 987.25. So do you believe that there is a gain? Do you believe that this will be their new value? Value of shares of existing shareholders post acquisition. Do you all agree? 900 was the pre-acquisition value, and then the gain is 87.25. Do you all agree? All right, that's great. Perfect. Moving forward, number of shares attributable to existing shareholders. Under share for share exchange offer, no new shares are given to existing shareholders. No new shares are given to existing shareholders. New shares are given to target company shareholders to be part of our company. Agree? So Campai company's existing shareholders total valuation is 987.25 and their shares still stand at 225, which means that the value per share is simply 937.25 divided by 225. Quickly, need participation. Is it clear? 987.25 divided by 225. 987.25 is the total value of all the existing companies' entire shares. Okay. Colin, 900 was the value of the shares of Campai company. 900 was the value of the shares of Campai company before this transaction. Due to this transaction, they receive a benefit of an increase in valuation of 87.25. So now their entire shares are valued at 987.25. Now, if their entire shares are valued at 987.25 and these are 225 million shares, so the value per share is 987.25 divided by 225. 987.25 divided by 225 will give you 4.39. Is it clear? Do you understand this now? This is value per share. This is the total value of all shares. It represents 225 million shares. So value per share is 4.39. Because this 987.25 represents 225 million shares. Existing shareholders are not being given any new shares. Existing shareholders had 225 million shares before transaction. They still have 225 million shares. They are not given any free shares, any bonus shares, any new shares. Okay. So if 987.25 represents value of 225 million shares, per share value will stand at 4.39. Now, value of shares of Skal company shareholders. Skal company shares were previously valued at 263.8. This valuation we already calculated. And they are also being given a benefit of 87.25. So the value of their shares, whatever number of shares X, Y, Z, A, B, C, D, E, F, G, H, I, J, K, L, M, N, O, P, Q, R, S, T, U, V, W, X, Y, Z, whatever shares they will have, the value of their all shares will be 263.8 plus 87.25. The value of their all shares will be 263.8 plus 87.25. 263.28, 263.8 plus 87.25. This comes out to be 351.05, 351.05, 351.05. Do you understand? Is it clear? This is the value of all the shares of the new shareholders. The new shareholders are becoming part of your company. New shareholders are becoming part of your company, and you have promised them to give them 50% benefit of any synergistic benefits. So their previous value plus the gain gives you 351.05. Okay. Now, is it clear till this point of time? Till this specific area, what we know is that the Skal company shareholders will become part of our company, and the value of their all shares, the value of whatever shares they will have, the value of whatever shares they will have will be 351.05. Correct? Now, this is value per share. This is value per share for the new company. Do you all agree? 4.39 is value of one share in the new company. And this is the value of all shares that will belong to Skal company shareholders. So we can say that we are issuing them 351.05 divided by 4.39. 351.05 is the value of all shares. 4.39 is the value of one share. So this means that we are giving them 80 million new shares. We have to give them 80 million new shares. We have to issue them 80 million new shares. The value of all the shares will be 351.05. Value of one share is 4.39. So this means that we are going to give them 80 million new shares. We have to give them 80 million new shares. Understood? Please let me know. Is this clear to everyone? Excellent, excellent. How many shares did they previously have? They had 40 million shares. They had 40 million shares. They are now being given 80 million shares. So what is the share exchange ratio? What is the share exchange ratio? What is the share exchange ratio? 2 for 1. Do you all agree? Is there any confusion? Any type of confusion to anyone? Why 2 for 1? Because we are giving them two shares for every one share they have. We are giving them 2 shares for every one share they have. Excellent. Okay. Percentage gain. This is the gain over a value of 900. So the percentage gain is 9.7. New. Is this clear? By companies, percentage gain is clear to everyone. Clear to everyone? Okay, P42. Okay, Muhammad Zarar, 351.05 represents value of all shares. 351.05 represents value of all shares. 351.05 represents value of all shares. 4.39 represents value of one share. 4.39 represents value of one share. 4.39 represents value of one share. So if 351.05 represents value of all shares, 4.39 represents value of one share, what will be the per share value? What will be the number of shares? Isn't it 80 million? Agreed? All right. Now, please, what did you divide? Okay. Listen, we are given, what did you divide 80.01 with? We are giving them 80 million shares. We are giving them 80 million shares for their previously held 40 million shares. We are giving them 80 million shares for previously held 40 million shares. So don't you think that the share exchange ratio is 2 for 1? Don't you think that the share exchange ratio is 2 for 1? Do you all agree that the share exchange ratio will be 2 is to 1? We are giving two new shares. We are giving two new shares for every one share they have. All right. So now gain for combined company is the gain, that is 87.25 divided by 900. So it comes out to be 9.7%. This is clear to everyone. The gain for combined company, gain divided by original value. And now for Skal company, what are they getting? Skal company shareholders are getting two shares. Value generation or acquisition is for both. Yes, it is for both. The question is stated that under the share exchange agreement, each party will enjoy 50% of the benefits. Okay. Now, what are Skal company shareholder getting? Each shareholder is getting two shares worth 4.39 each. If I have one share in a Skal company today, I am getting two brand new shares of 4.39 each. So if I am getting two new shares of 4.39 each, I am getting shares worth 8.78 million, sorry, $8.78 for every one share of 6.59 I had. So the gain for me as a shareholder, I am giving away a share of 6.59 and I am getting two shares worth 8.78. I am giving away one share of 6.59 to get two shares of 8.78. So my gain per share is 2.18 and percentage gain is 33%. Radhika, it is a straightforward question. To be very honest, it is a very, very easy question. I am sure that this, if someone has a reasonable knowledge of AFM, I don't think that it was a difficult question. These same type of questions have been tested many times in the past. Okay, Mukesh, so this is not relevant to this question, but I was there for share question. I came out to be shares for one share. The answer came out to be 18 shares for 7 shares. Do we need to round it off in such a way? You can show, Mukesh, you can show me your working. I believe it is nearly 2 for 1 shares. If your answer is near to 2 for 1, it is correct. Otherwise, you are doing some mistake. Please explain cell 4.2 once again. Okay. Samir, value of one share is 4.39. Do you agree that the value of one share is 4.39? Do you agree that the value of one share is 4.39? Do you agree, Samir? This is value of one share, one share, one share, one share. I am acquiring someone and I have to give them some number of shares such that the total value of their all shares must be 351.05. I am acquiring another company such that the value of their all shares must stand at 351.05. So if I have to give them shares worth 351.05 and there are the value of one share is 4.39, this is the total value and this is the value of one share. So don't you think that total value divided by value of one share will give me the number of shares that I need to issue? Is it clear to everyone now? Okay, cell 4 P449. This was given to you in your question. Pernica, 6.59 is value of one share of a Skal company. We have already discussed it. It was given to you. Oh my God, Samir. Share exchange ratio is something that you were supposed to calculate. Samir, have you joined us right now? I am very sorry if you are someone who has joined right now. Wait for the next question to start rather than asking something from the question. In the question, it was stated that we have to calculate the share exchange ratio. Samir, all right, those who have been with me since start, are you all clear? Is there any single student who started this question since inception start and having a problem? No? All right. Those who have joined in mid of the question, be patient, wait for the next question to start so that you are with me. Obviously, there is a lot of information which we have discussed while doing this question. It is a 50 marks question. Samir, you have to understand that you are being a part of a group and you have to understand that if were you from a start or not. Okay. Anyways, this was computational area. I assume that 99% of the students are clear. But if there is any confusion, you can talk to me later. Now I am going to close this computational sheet and we are going to move towards the theoretical area. We did the computational part and now we have to move to the theory. Those who have just joined, do make sure that you WhatsApp me or complete name on the number mentioned on the screen. And also that after the session, I am going to provide you with the Google Drive link with all the free resources that we have and with all the material that we have with us. Okay, any student, any comments till now? Is the session going fine? Do you guys have any sort of comment? Do you guys have anything to discuss? Shall we proceed to theory? All good. Shall we proceed to theory? Do you feel that this class is benefiting you? No, we won't have any break, please. I'm sorry. We have to cover a lot. We have not discussed anything. Okay, secret sauce, I will tell you on the WhatsApp. Probably you have joined late, so you can watch the recording. I discuss what is secret sauce and how you can avail it. Okay, let's move to the theory area. Let's move to the theory area of this particular question. Will you upload the solution on Google Drive and you will share it on WhatsApp? I will do both. Sir, is there any other question like this? Let's solve anything else. If you do two questions, they are enough. This specific question was a mix of SIGRA and intro and West Parlay. In SIGRA and intro, you have the computations of different considerations, cash, bonds, and shares. All right, let's proceed towards the theory area. Are you all ready for the theory area now? We have also discussed how you can get the professional marks. Agreed? So everything, each and everything that we are doing today is very important. You have to be very attentive. You have to be very careful. Please don't ask me for breaks because you have to complete a lot. These are your game changer webinars. So you are supposed to be fully attentive and not ask for breaks. Yes, we can do a break if the class goes beyond 3 or 4 hours maybe, but that break will be a short break as well. Now let's move to the theory. This is how you will write the theory. This is how you will write a report. We discussed professional marks. How many professional marks do we have? We have 10 professional marks. We also discussed how you can get those 10 professional marks. What are the important ingredients? One thing was formatting. Other thing was that you have proper references. You must have proper headings. You must have introduction paragraph. You must write assumptions. You must write anything that relates to the question or the data given into the question. These were some basic things. What will be the format of the report? Your top will start with like this. 99.99% cases, the report is written to the board of directors. So you will write report to the board of directors of XYZ company, ABC company, Campai company in this case. Then this introduction paragraph. Is it mandatory? Is it mandatory to write the introduction paragraph? Is it mandatory to write a heading introduction? Yes or no? Yes, it is mandatory. Why is it mandatory? Because if you need professional marks, you have to write headings, and we just checked the marking scheme which suggested that you have to write an introduction paragraph. What will be the contents of the introduction paragraph? In the introduction paragraph, you will explain what this report is all about. So it says that this report provides estimates of the additional value created by the acquisition of a SCAL company by Campaign company. It also shows how the value created is shared between Campaign and SCAL company shareholders. Three areas are discussed in the report. First, whether either or both cash and the share for share option will be acceptable to both the set of shareholders, together with the discussion of the assumptions made. Second, a discussion of the financial issues facing MI company regarding a cash offer, taking account of the constraints faced by Campai. And finally, a discussion on how MI company might respond to the negative comments made about the factory closure. So the first paragraph will be an introduction paragraph. Introduction paragraph is rephrasing the requirements. You rewrite the requirements in a different manner. Summary of results. Summary of results is again a good technique to link your spreadsheet with your report, to make your report more practical, presentable, and how it is done in the boardroom. So summary of results will include all the summaries of the calculations you did in a spreadsheet. For example, in this question, it was about cash offer, share offer, the percentage gain each of the type of shareholders will get. In an investment appraisal question, it might be the value of net present value, IRR, MIRR. So it depends upon the question, but you can learn this heading as well. What first heading will be introduction, and the second heading will be summary of results. Introduction, what you will do? In introduction, you will rephrase whatever is written in the requirements. In summary of results, what you will do? You will rewrite the key values that you have computed in the spreadsheet. Are we clear till now? Is it clear? So your first heading will be introduction. Your second heading will be summary of results. Your first heading will be introduction. Your second heading will be summary of result. Your first heading will be introduction. Your second heading will be summary of result. These are the important ingredients that you can write in any report. Then you will go along as per the questions requirement. So first one is discussion of acceptability of offer and assumptions made. Is assumption part of the professional marks? Yes or no? Yes. Correct. Assumptions, even if not directly mentioned in the question to write assumptions, will still be writing your assumptions. In both offer options, Campai company shareholders make a smaller percentage gain compared to Skal company's gains. Here it is written. Okay. However, Campai company shareholders may find this acceptable as they do benefit from the acquisition, and it is of strategic importance to Campai company. It is not clear whether the financial benefits arising from the strategic importance has been accounted for in the gain in value. If it is not then my company shareholders might gain further. So they are actually saying that once you acquire your competitor, there are more strategic synergistic benefits that will come to you in the future. For example, in form of reduced competitors, in form of reduced competition, in form of increased customer base, in form of increased number of orders in the future. So they are having a questioning mind whether these values were incorporated in the synergistic benefits. Yes or no? Because we have valued the other company only, we have valued the other portion of the company. I am Campai, I acquired Skull, I revalued this company and I calculated the gain on this division, strategic business unit, factory only. There are some more gains that I will enjoy. For example, there will be reduced competition in the region. So there might be some more synergistic benefits which will come to me in the future years. Currently, the cash offer at 21.2% to Skull company shareholders does not meet the minimum requirement of 25%. Linking from the question, linking your answer from the question gave you this target rate. Do you all agree? The question mentioned that the cash offer target is 25%. KMA company may need to raise its cash offer, but that will mean an even greater financial requirement. If I raise my consideration from $8 to $9, $10, $12, I may be able to acquire them, but I am facing a financial crunch already. The discussion below shows that this may present difficulties for Campai. The share for share offer does meet the minimum premium requirement for Skull company shareholders and will therefore be acceptable to them. However, Campai company's current shareholders may resist the move as their gain in value decreases. Furthermore, Skull company shareholders will become new shareholders in Campai company, which will diminish the Campai company's current shareholders' control of the company. So this is the disadvantage. This is the disadvantage you face. This is the disadvantage you face when you acquire another company based on shares, share for share exchange. Your existing control dilutes. Do you all agree? Is this clear to everyone? 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 Please confirm me. Now these points, if someone has read the 67 pages booklet, if someone has read the 67 pages booklet, they can link these points over here. They can recall some facts about share for share, cash offer. Do you all agree? That's why I say that 67 pages booklet is very important. You must learn that booklet. Keep a print of that booklet. Yes, obviously you will not get a direct question. They will not say directly list down advantages of cash offer, list down advantages of shares for share offer, but you have to rephrase and you can rephrase it. You are at a professional level. So this is something that you need to do, improvise at on spot. The discussion above is predicated on the fact that the additional value created will be 174.5 million. Although different valuation methods are used to assess Skull company's value before acquisition and after acquisition, it is assumed that both methods based on cash flows and on earnings and PE ratio will give valid estimates of the Skull company's value. In reality, there are more than two methods. In this question, we used free cash flows method and PE ratio method. But in reality, there are more methods. Do you all agree? In reality, there might be, when you are acquiring another company, you may also use dividend valuation model. You may also use the earnings yield model. You may also use free cash flow equity model, XYZ. So now what they are doing, this paragraph is for professional marks. They are questioning an information that was given to you in the question. They are saying that it is calculated on the assumption that you use these two models. But there are several other methods that you can use. There are more methods that can be used. And practically, when you acquire a company, you don't rely on just two methods. You also calculate in NAV, net assets valuation method, all assets minus all liabilities. There are many, many more methods that you use in real life when you are acquiring a company. Is this clear? In estimating the value, several further assumptions have been made. For example, in order to calculate the estimated equity value of a Skull company, the free cash flows valuation method is used. For this, the growth rate, cost of capital, effective time period when the growth will take place, perpetuity are all an estimates. Now, these are some common estimates, common assumptions. We have assumed that free cash flows will keep on growing at a rate of 4% every year. Yes or no? In real life, it may not be true. Sometimes the growth might be 3.5%. Sometimes it might be 4.5%. Sometimes it might be 4%. Sometimes it may be 5%. So we have used a growth rate of 4%. We have simplified the assumption. We have assumed that every year these things will grow at 4%, but in real life it is not true. Likewise, cost of capital. Every year, the base rates change. If you have a floating rate loan note, your cost of capital will change because your cost of debt will change. Every year, the value of shares will change. Every year, the cost of equity may change. The business and the financial risk of the company may change, having an impact on cost of capital. So these are our assumptions. Then one more assumption is about the tax rate. You assume that the tax rate will be 20% every year in perpetuity. But in real life, tax rates may change. The government may increase or decrease the tax rate. Yes or no? Do you all understand what I am trying to talk about? Is it clear? All right. Moving forward, this is the second heading, financing issues faced by campaign company if the acquisition is by cash and the options of a mixed offer. Given that Skull company shareholders want at least a 25% gain in value, they will demand more than $8 per share. Consequently, campaign company will need to transfer more of the value created from the acquisition from its shareholders to Skull company shareholders. Since campaign company has minimal cash resources, it will need to raise additional finance for the acquisition through new equity finance or new debt finance or a combination of the two. The company could consider selling some of its non-current assets to fund the acquisition, but the large size of the acquisition does not appear to make this the only viable funding option. Okay, in order to fund something, if you want finance from someone, you either take loan, you borrow money, you form a partnership, or you sell your existing assets. But selling in existing assets is not a good idea. You are not acquiring a small thing, you are acquiring another company. You will need a huge amount of funding. So it is not a good idea. Raising new debt finance can present difficulties since it is close to breaching the existing debt covenants. It will probably need to renegotiate the current debt covenants if it is going to use debt finance wholly or partly to finance the acquisition. Any new debt covenants are likely to increase the cost of borrowing, increase its financial and therefore its overall risk profile, and possibly add to financial distress cost. This will make it more difficult for campaign company to conduct business in the future. If you borrow more, your cost of debt will increase. Due to increase in cost of debt, your financial risk will increase. Due to increase in financial risk, overall cost of equity may increase as well. Okay? Do you all understand this? Do you all understand this? Is it clear to everyone? Is it clear to everyone? Quickly, I need participation from everyone. Is it clear? All right. Now, moving to the next heading about factory closure. This was something that was about the non-financial area, correct? Okay, one important thing that I need to highlight over here. You are not perfect. I highlight it every time. You are not perfect. You are not expected by ACCA. You are not expected by ACCA to write this long and perfect report. You are not expected by ACCA to write so much, and that too in exam pressure, and that too imperfectly. Okay. Okay. So if you even write 50%, if you even write 50% of what I am written over here, you are on the right direction. And I believe if you read the same report 2 to 3 times, if you read this report 2 times, 3 times, again and again, you will realize that you are in a position to write the report yourself. Not perfectly. This is a perfect report. You are not expected to write the report perfectly. You have to write, listen carefully, you have to write 2 to 3 sentences, short paragraphs of 2 to 3 sentences. Okay. For example, never write a long, huge paragraph. For example, over here you can see that what they did, how many paragraphs they wrote. They wrote 1, 2, 3, and 4. They wrote 4 paragraphs. They wrote 4 paragraphs. Do you agree? Yes or no? They wrote 4 paragraphs. So you will write 4 paragraphs, but of 2 or 3 sentences each. Secondly, can you see that they have given reference to the particular part they are answering? They are also giving you a reference to a particular part they are answering. In the heading, you can see it is written part 5. In the heading, it is written part 5. So why they have written part 5? To make the life of examiner easy. To make the life of the examiner easy. Is it clear to everyone? Okay, do we copy our workings from spreadsheets and put them as appendix in the words report? Yes, you can do that at the end. Yes, you can do at the end. All right, moving forward. Now let's see how many marks were given for this part. What was the value of part 5? This is part 5. So they have 7 marks, correct? For 7 marks, if you write 3 to 4 paragraphs of 2 to 3 sentences each, you will get a good marks. To improve theory answer, where 3. Okay, Mukesh, the best way is to keep reading the ACC answers again and again several times. Several times. For example, if you read this report 2 to 3 or 4 times, then a similar question comes in your exam, you will be able to write. And trust me, there is no random theory. Generally, ACCA theory is something that was tested in the past. How many of you are doing this question for the first time and feel they can write something? It was not 100% new. Do you all agree? It was not 100% new. You have already read similar things in different past paper questions. Do you all agree? All right, moving forward. Excellent. So nothing is 100% new. Yes, 10 or 15 or 20% can be new, but generally the things are repeated again and again. Yes, Manu, after the session. Okay, coming to factory closure. The negative comments made in the press and by others on the proposed factory closure could harm by company's positive corporate reputation in relation to sustainability and taking care of its employees. This loss of reputation may harm in corporate value on a long-term basis. Again, a short 2 to 3 sentences paragraph. However, the solutions proposed by the director of keeping the factory open or not undertaking the acquisition at all are probably not viable. Keeping the factory open could impact the additional value created from the acquisition and will diminish the returns to Campai Company's current shareholders. Both keeping the factory open or not undertaking the acquisition will probably compromise Campai Company's strategic direction. Campai Company should therefore proceed with the proposed closure and possibly consider what further actions to take. Campai Company may take the decision that the harm caused by the negative commentary is transitory and will pass when the press moves on to the other news items. The company may decide that there will be little long-term harm to its reputation and therefore decide that it will take no action other than to defend itself. It may state that its acquisition is being taken in the best interest of the company and its stakeholders overall. It may want to well explain this. Now, isn't it that something that practically happens with us? There is some news on the television, and when we are focusing on that, media diverts our attention to something else. Correct? So this is what they are putting in from the practical world, that the company may need to do nothing at all. People will gradually forget this news. There will be a new news being broadcasted, or maybe if you have influence, you can ask media to divert audience attention somewhere else. Okay, so this is what they are actually asking you. All right, then conclusion. Conclusion is very important. Also, you will write report compiled by, but you will not write your name, and then you will write date in bold, but you will not write any date. Okay, Now ask me, is there anything? Okay, you can read the entire report a couple of times after the session. It will be helpful for you. It will help you. Do you have any sort of question? Do you have any sort of question? May I have lunch while eating? I hope you don't mind. I haven't had breakfast even. I hope you will not mind. Correct? Wow. Okay. Tell me, is there any question? Any question relevant to question number one? Anything that you want to ask for question number one? Or can we move to question number two now? Question number one is clear to everyone? No, no, no break, no break. Is question number one complete? Is there anything that you want to know about question number one? Please quickly, please quickly. If you have something to ask, write down, I want to ask XYZ thing. If you don't have anything to ask, let me know you don't have anything. All right, let's take 3 minutes break, not more than that. I am online, I am over here. If you want a break, take not more than 3 minutes break before we move to the next question. So if someone has to pray, if someone has to use restroom or anything, 3 minutes. Okay, starting right now. After 3 minutes, I will answer you all. So now we are done with the first question, and it is time to go to the second one. Okay. So are you all ready for the second question? All right. Have you all downloaded the June 2025 past paper? Have you read this previously? Have you read this question? Have you all read this question or not? All right. This question is about hedging, and we will now proceed and start and solve this entire question. Okay. All right. So let's start. This is question number 2 of June 2025. It says Sohabet company is planning to sell one of its office buildings and invest the money from the sale in new warehouse facilities. Now, what is the keyword over here? Which keyword is very important for your questions? What specifically is very important? Invest. Why? How many cases do we have? We have a case of investment and borrowing. In case of investment, what are we worried with? In case of investment, what is our concern? Our concern is that if interest rates drop, we will be earning less. So it says Sobat company is planning to sell one of its office buildings and invest the money from the sale in a new warehouse facilities. Today's date is 1st of April. Is there any type of importance of today's date in an interest rate hedging question? Yes or no? What's the importance? Why do the question need to tell us today's date? What is the importance actually? Okay, it helps for FRA and yes, we need today's date when we calculate the expected or predicted futures price. So today's date is 1st April. Sobat company expects the sale of the production facilities to be completed and 54 million received on 1st of August. So today is 1st April, but we will receive 54 million or investment on 1st August. How many months from today? April, May, June, July, 4 months. Okay. So this is today's date and this is specific, it is transaction date. And we are worried that during this 4 months period, if interest rates drop, we will be receiving less income. This receipt will need to be invested until 1st of December. So now we have today's date, 1st April. Investment date is 1st August, 4 months from today. Investment will be till 1st of December. So investment will be for how many months? August, September, October, November. 5 months or 4 months? Investment time period is 4 months. August, September, October, November. 4 months. Today is 1st April. Investment starts 4 months from today. And we will invest for 4 months from that date. The date when the purchase of the warehouse facilities is forecast to be completed. Okay, let's read it again in a quick way. Sobat company is planning to sell one of its office buildings and invest the money from the sale in new warehouse facilities. So they will sell a building and invest it and invest the money from the sale in new warehouse facilities and they will purchase the new warehouse facilities. Today's date is 1st April. Sobat company expects the sale of the production facilities to be completed and 54 million received on 1st of August. This receipt will need to be invested until 1st December, the date when the purchase of the warehouse facilities is forecast to be completed. So right now they have a office building, they will sell it. By selling it on 1st of August, they will receive fund. These funds will be kept invested for a period of 4 months until 1st of December when they need it to buy something else. The central bank base rate is currently 4.50%. Currently means which date? Currently means which date? Currently means 1st of April. Okay. And what are we worried with? We are worried that if this central bank base rate falls further, if it reduces, if it becomes 3%, 3.5%, we will receive less income. The central bank base rate is currently 4.50%, but has recently been volatile. Prediction suggests that the central bank base rate could fall as low as 3.8% by 1st of August. This is my concern. Sobat company can currently invest funds at the central bank base rate less 30 basis points. Now, central bank base rate is 4.5%. For example, if I invest today, what return will I get? If I invest today, my investment will be at central bank base rate minus 30 basis points. So if I invest today, I can get 4.2%. Why 0.3% is deducted? When you invest, you can invest at certain basis points below the base rate. This is how banks earn. And when you borrow, your borrowing cost is certain basis points above the base rate. So right now, if I invest money, I will not get 4.5%. I will get 4.5% minus 30 basis points. 30 basis points is 0.3. So it will be 4.2%. Generally in case of borrowings, it is central bank base rate plus XYZ basis points. In case of investments, it is central bank base rate minus certain basis points. So right now I can earn 4.2%, but I'm worried that when I invest, I will be earning how much? If I invest on 1st of August, I will earn how much? 3.8 or 3.5? 3.5, because I can invest funds at 30 basis points below the central bank base rate. So if base rate is 3.8, my investment will be 3.8 minus 0.3, that is 3.5%. When the investment was discussed at the last board meeting, the directors indicated that they would like to achieve at least a 4% annual return on the funds invested. Okay, this is what directors actually want from you. This is actually what directors actually want from you. The directors are expecting you that wherever we invest, we must get at least 4%. So if the base rate actually drops and if we do not do any hedging, our net income will be less than the target rate. But that the hedging method chosen should have a limited range of possible outcomes to make cash flow forecasting most predictable. Now tell me, what are interest rate hedging tools? List down some of the ways in which we can hedge the interest rate: forward rate agreement, futures, options, swaps, correct? What do they mean by have a limited range of possible outcomes? Which instrument is best under these circumstances? FRA. Why? The outcome of FRA is certain. The outcome of FRA is certain. In a forward rate agreement, you lock the rate today on which a future transaction will be conducted. So the rate is most predictable in case of FRAs, in case of forward rate agreements. In case of futures, in case of options, the rate may vary. Sometimes you exercise option, sometimes you don't exercise the option. Results are different. Sometimes the futures, if futures are not moving, if there is a basis risk, if the bases are not decreasing linearly, there is a risk that the outcome may vary. So as per the question, the most appropriate instrument is a forward rate agreement, because the directors want a return of more than 4%, and then they want a very limited range of possible outcomes. FRA has no possible range of outcomes. The FRAs are the most certain rate giving instruments. Okay, hedging the transaction. Sobat Company's finance director is considering using traded futures or options. What do they mean by traded? What do they mean by traded? Are they talking about exchange traded or OTC, over the counter? They are talking about exchange traded products. Exchange traded products are those products that can be bought and sold. Exchange traded products are available on the exchange. They are less risky. There is an exchange involved which takes control of the transaction. Transparent procedure. It is not between two parties. But the issue is that the contracts are standardized. There is a problem of over or under hedging as well. So Sobat Company's finance director is considering using traded future or options to hedge the investment as follows. 3-month dollar futures, $500,000 contract size. Now, is there any significance of this 3-month? Is there any significance of this 3-month? Yes, we need to adjust the number of contracts. If our contract period is 4 months, for example, if you look over here, if our investment time is 4 months, and the contracts are for 3 months, we need to increase our number of contracts. Is there any significance of contract currency? Is there any significance of contract currency? Yes. What is the significance of contract currency in this question? What is the importance of contract currency in this question? Any importance of contract currency? Okay, I am talking about futures. I am talking about futures. In case of currency, in case of foreign currency exchange, contract currency is more important. In case of interest rate hedging, generally your investment currency or your borrowing currency is same as contract currency. Okay. Terrero, I'm not talking about option contracts right now. I'm just talking about the future contracts. Okay. No, Hamad, I'm not talking about option contracts. Put and call comes in option contracts. Right now, we are talking about the normal interest rate futures. Contract currency is important, is more important in case of currency hedging, because if the contract currency and the foreign currency is not same, we have to do some adjustments to calculate number of contracts. Okay, prices are quoted in basis points at 100 minus annual percentage. We already know that. And we are given with the months, June, September, December, and we are given with the relevant rates. Okay. So after this, we are given with the options. We have options on 3-month dollar futures, contract size is 500,000. Exercise price is 96. Exercise price is 96. And the premiums are given below. There are call and put options both. Okay. The terms offered on derivatives are based on the central bank base rate. It can be assumed that futures or option contracts are settled at the end of each month. Basis can be assumed to diminish to zero at contract maturity at a constant rate. Based on monthly time intervals, it can be assumed that there is no basis risk and there are no margin requirements. Since the last board meeting, the finance director has received a query from another director of whether over-the-counter options should be considered instead of traded options. The directors would like to know the relative advantages of each type of option. A, calculate the expected results of using the hedging methods being considered, assuming the central bank base rate falls to 3.80. Now tell me, in case of futures, this is a very serious question. In case of futures, will we use the concept of lock-in rate? No, 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 no. Yes. Oh, wow. Radhika, yes. Jui, yes. Esther, yes. Terrero, yes. Will we use lock-in rate? Okay. Now everyone read what Yasser has written. Try to understand that foreign currency hedging and interest rate hedging are totally different. Try to understand that foreign currency hedging and interest rate hedging are absolutely different things. In currency hedging, for futures, we use lock-in rate, or the other concept was leave the transaction at risk. Buy now, sell later, sell now, buy later. Currency hedging and interest rate hedging are different. Okay. Currency hedging and interest rate hedging are different. We use lock-in rate in currency hedging. In case of interest rate hedging, whether it is borrowing or it is deposit, we are making a table of predicted futures price. Now, let me confirm this information. This is the data that we are given. Today is 1st of April. Amount of borrowing is 54 million. Deposit starts at 1st of August. Deposit ends on 1st of December. Deposit starts from today, 4 months from today. Deposit period is 4 months. Current base rate, the base rate applicable today is 4.50%. Expected base rate on date of deposit is 3.8%. And we as a company can borrow at base rate minus 0.30%. Is this information in the first table clear to everyone? It is just copy and paste of the information that was given to us, and that's it. Is it clear? Shall I proceed? All right. Now, how to deal with the futures problem? First thing you will do is to calculate the number of contracts. So what we are doing, in fact, before number of contracts, we have written the information. Contract size is given to us, contract period is given to us, and relevant futures are 96.04. Now, why 96.04? We will go for the first futures available to us after transaction date. So our transaction date is 1st of August. Our transaction date is 1st of August. The very first futures information that we have with us is for September futures. That is the futures that expire at the end of September, and their relevant value today is 96.04. Futures is a product that is exchanged on futures market. You can buy now, sell later, sell now, buy later. And the value of these futures, the value of September futures today, that is on 1st of April. The value of September futures today, that is on 1st of April, is 96.04. Do you all agree? Do you all understand that in interest rate hedging, we select the first available futures right after transaction. We will not use June futures. We will not use December futures. June futures are before our transaction, and December futures are ahead of our transaction, more ahead. We prefer the first future contract that is right after our transaction date. Our transaction is on 1st August. The earliest available future contracts are September futures. Okay. Then this is the famous table that I make. I don't know whether we see it commonly in the past papers or not, but I myself prepared this table. I find solving it using this table very easily. I don't know, some of you may make this table, some of you may agree with me, and some of you may disagree with me, but I always make this table for ease. In this table, there are 3 dates. Number 1, date today. Okay, it's helpful, correct? So number 1, the first thing is the date today. It was 1st April in our question. Okay, so the first thing that you do in the table is to write the date today, that is 1st of April. Number 2, you write the date of the transaction. So in our question, date of transaction is 1st August. Number 3, the third date will be the futures expiry date. We know that we are going for the September futures. So the September futures expiry date is 30th September. So there are 3 dates effectively: 1st of April, 1st of August, and 30th September. Is it clear how we write the dates? Date today, date on the date of transaction, and the futures expiry date. So as per our data, today is 1st April, transaction date is 1st August, futures expiry is 30th September. These are the 3 dates that we will write. Then we know that the last day, that on 30th September, the value in the market and the value of the futures on that very day will be same. Otherwise, there will be infinite gains. I believe I have explained this concept of infinite gains or given you an idea about this in one of the video lessons. It is not important to know, but just remember that it is going to give you infinite gains. If you can buy something from the spot market at a different rate and the same products, futures of the same date are available for a different rate, you will be buying from the spot, selling at the futures market. But for ease, you don't need to go into its logic. You don't need to go into very advanced logics. When you go for CFA, when you do the financial analyst professional qualification, you will also be taught that the basis may not diminish to zero linearly, or there can be multiple more problems. For now, on the date of transaction, the interest rate and the future prices are going to be same. We don't know what they will be. We don't know the futures price on 30th September. We don't know the interest rate on 30th September, but we know that they are both going to be equal. So if they are going to be equal, the difference between the two is going to be zero. So is this clear? Okay. So step number one, dates. Step number one, dates. Today, date of transaction and futures expiry. Step number two, this thing, that the difference between the two on the date of expiry, last date of futures will be zero. Now coming to step number three, today's interest rate is 4.5. Okay, do remember that we will take central bank base rate in calculations only. We are not doing a company specific rate calculation. We will not use central bank base rate minus 30 basis points. Rather, we will use the central bank base rate. The futures valuation is performed on the general rates, not adjusted for the company specific risks. So 100 minus 4.5, 4.5 is the rate today. And on 1st April, if the rate is 4.5, it can be reflected as 100 minus 4.5, that is 95.5. The futures price today is 96.04. And the difference between the two is 0.54, and the difference is called basis. Am I clear till this point? Interest rate today, futures price today, and the difference between the two is known as basis. So this basis comes out to be 0.54. This basis comes out to be 0.54. Okay. I will highly appreciate if those who are online and available and listening, please drop me a message after every 15 or 20 minutes. It is really difficult to keep on talking with the laptop for the past 3 hours. Okay. So the step number one, dates. Step number two, this column. Step number three, this column. Generally, this information is given to you. So step number one, dates. Step number two, this area. Step number three, this area. Now, when you have this basis 0.54 on 1st April, you will calculate basis, the unexpired basis on 1st of August. How do we do that? We know that today is 1st April. Futures expire on 30th September. Basis today is 0.54. This 0.54 will become 0. 0.54 value is on 1st April. April, May, June, July, August, and September. So we know that 0.54 will become 0. 0.54 will become 0 in a 6 months time period. Correct? 1st April value of basis is 0.54. 30th September value of basis is 0. So 0.54 becomes 0 over a period of 6 months. On 1st of August, 2 months are remaining. So 0.54 divided by 6 multiplied by 2, because August and September are still remaining. Basis diminishes linearly every month. That means basis is decreasing linearly every month. So you divide it by 6 and multiply it with 2. Is it clear to everyone? All good? Any confusion, any problem, please do ask me. Okay. Now we also have this value. How? The question is stated that it is expected that on 1st of August, that is on transaction date, the central bank base rate will be 3.8. So if the central bank base rate will be 3.8, it can be reflected as 100 minus 3.8. So 100 minus 3.8 is the reflection of central bank base rate, the expected central bank base rate on the date of transaction, and 100 minus 3.8 is 96.2. Okay. Now finally this comes out as a balancing figure. Okay, one important thing. If we have done this already in the classes, if interest rates decrease, future prices increase. Okay, we know this, that if interest rates decrease, future prices increase. So now we know that from year to year, interest rate has decreased. From year to year, interest rate has decreased. So from year to year, the future prices are expected to increase, and the difference between two will be 0.18. So this is 96.2 plus 0.18, that is 96.38. Okay, Darsh, let me re-explain this 0.18 value. Let me do the working over here. 1st April, 1st May, 1st June, 1st July, 1st August, 1st September, 1st October. Darsh, be with me. Are you here? Basis on 1st April is 0.54. Basis on 1st April is 0.54. Do you agree? Okay. And basis on 1st of October will be 0. 30th September is effectively 1st of October. So we know that 0.54 is going to decrease linearly, stated in the question that basis decreases linearly, reduces, diminishes linearly over the period. So we know that the basis or the difference is going to decrease linearly. Now, how many months do we have? 1, April to May, May to June, June to July, July to August, August to September, September to October. 1, 2, 3, 4, 5, 6. Do you understand that 0.54 will become 0 in 6 months' time? Do you understand that 0.54 will become 0 in 6 months' time? So what will be the monthly decrease? What will be the monthly decrease? What will be the monthly decrease? 0.54 minus 0 divided by 6. Monthly decrease will be 0.09. Every month, the basis is going to reduce by 0.09. Every month, there will be a reduction of 0.09. Every month, this value is going to decrease by 0.09. Do you agree, Darsh? All right. So if 0.54 decreases by 0.09 after 1 month, so it will be 0.45. If 0.45 further reduces by 0.09 after 1 month, it will be 0.36. If 0.36 further reduces by 0.09 after 1 more month, it will be 0.27. If 0.27 decreases by 0.09 after 1 month more, it will be 0.18. And likewise, if 0.18 decreases further by 0.09, it will be 0.09. And if 0.09 decreases by 0.09, it will be 0. Darsh, are you able to grip this thing now? Okay. I believe you have not completed the lessons yet from the portal. Anyways, so now This table has been formed, and this 96.38 is expected futures price on 1st of August. 96.38 is expected futures price on 1st of August. Do you all understand that 96.38 is the expected futures price on 1st of August? You expect that the futures that are right now valued at 96.04 will be valued at 96.38. Now, number of contracts, total loan is 54 million. Each contract is of 5 lakhs, so 54 million divided by 5 lakh, and adjustment for the time period. The loan period is greater than the contract period, so it will be a multiplication of 4/3. Again, there have been logics in a lot of previous sessions which we have used for this. Is it clear to everyone? No, Hamad, actually what I do is that, yes, you can say basis can be negative if you subtract 95.5 from 96.04, but I treat basis as the difference between the two. And then using common sense that if interest rates have decreased, so future prices will increase, I have added it up to bring it to 96.38, but your method will also work. All right, Hamad. Okay. Okay, Mukesh says for number of contracts, can you quickly say what it to be multiplied? Oh, it is a long calculation that we have done in the regular classes anyways. Let me do it over here. Let's say contract size is 500,000. Loan amount is 1 million. Loan period is 6 months or 3 months. In fact, loan amount is also 5 lakh. And contract period is 3 months as well. Okay. Answering Mukesh, if anyone has confusions in calculations of number of contracts, they can see these multiple examples. Mukesh, if contract size is 5 lakh, loan amount is 5 lakh as well, loan period is 3 months, and the contract period is 3 months, how many contracts will you need to hedge? How many contracts will you need to hedge? Can you tell me? You want to hedge a loan amount of 5 lakh and your hedging period is 3 months. You just need one contract, correct? If I buy one contract, it will cover 5 lakh for a 3 months period. Clear? Now let's change this case. Let's change this case, Mukesh. What if the loan amount is 1 million? What if the loan amount is 1 million? Will one contract work? No, sir, one contract will not work because one contract is of 5 lakh, which covers a 3 months period. If your loan amount is 1 million, you will need two contracts to cover or to hedge. Do you agree? Do you all agree? We need two contracts. Now, let's further change this example. What if the loan period is 6 months? The loan period is 6 months. Contract size is 5 lakh. Loan amount is 5 lakh as well. Now, if loan amount is 5 lakh and if I buy just one contract, one contract is going to cover a 3 months period. It is not going to cover 6 months period. Okay. If the loan amount is 5 lakh and contract amount is 5 lakh as well, but the loan period is 6 months and the contract period is 3 months. So one contract is going to hedge a period, a first 3 months period. The second 3 months, month number 4 to 6 will remain unhedged. So what we have to do? Do we need two contracts? One contract will cover or hedge a period of 3 months for 5 lakhs. So we need 2 contracts. How did we calculate this? We actually calculated how many 3-month periods do we need to cover. We need to cover 2 3-month period. There are 2 3 months period in a 6 months time interval. So we multiply it with 6 over 3. 6 over 3 tells us 2. 2 actually tells us that there are 2 3-month period in total 6 months. So we need 2 contracts. Okay, one more case. What if the loan period is 9 months? What if the loan period is 9 months? Will one contract of 5 lakh hedge everything? No. We will need 3 contracts. Why will we need 3 contracts? We need 3 contracts because the first contract is going to hedge month number 1 to month 3. The second contract is going to hedge month number 4 to month number 6. The third contract is going to hedge month number 7 to month number 9. So we will need 3 contracts. Effectively, we check how many 3-month periods, how many times there are 3 months in a 9-month period. So the multiplication tells us, multiplication by 9 over 3 gives us 3. This 3 tells us that there are 3 months periods that you need to hedge. There are 3 months period that you need to hedge. Am I making sense? Yes, Mukesh. All right. Likewise, what if contract size is 5 lakh, but the loan amount is 1.5 million, and the loan period is 9 months, and the contract period is 3 months. If I simply divide loan amount by the contract size, 1.5 million divided by 5 lakh, it is going to hedge 1.5 million, but for the first 3 months only. 1.5 million divided by 5 lakh gives us 3, telling us that we are hedging 1.5 million, but for a 3 months period only. What we further need to know is that we are supposed to hedge a period of 9 months. How many 3 months are there in a 9 months time horizon? So we will totally need 9 contracts. Is it clear, 21? Is this clear? The very same logic is applied over here. Loan divided by contract size multiplied by loan period over contract period gives us 144 contracts. Then I just said that in case of Mumtaz, the mechanism will be same. It will be 7 over 3. For example, if the loan period over here, the loan period is also 4, correct? Just like you are giving an example of 7, it is 4. Okay. In case of deposits, we are worried that interest rates will decrease. If interest rates decrease, future prices will increase. If interest rates decrease, future prices will increase. So what strategy shall I follow? Sell now, buy later, or buy now, sell later? If interest rates decrease, future prices will increase. So what will be my strategy? My strategy will be buy now, sell later. Buy now at a lower rate, sell later at a higher rate, and make a gain. Buy now, sell later. Buy now at a lower rate, sell later at a higher rate. Do you agree? So my strategy is going to be buy now, sell later. Buy now, sell later. I will buy now and I will sell it later. Is it clear? In case of deposit, we are worried that interest rates will decrease. We know that if interest rates will decrease, future prices will increase. So my strategy is buy now, sell later. In case of borrowing, what is our strategy? Sell now, buy later. In case of borrowing, we are worried that interest rates will increase. If interest rates will increase, future prices will decrease. So sell now at a higher rate and buy later at a lower rate. Do you all agree? And as per above working, buy now, sell later means buying at 96.04 today, selling at 96.38 later. So 96.38 minus 96.04 gives you the gain divided by 100 because everything is in percentages, multiplied by 144. This is the number of contracts. Multiplied by 5 lakh. This is the value of one contract. Multiplied by 3 over 12 because this is the time period of the contract. I repeat, buy at 96.04, sell at 96.38, make a gain, divided by 100 because these two values are in percentages, multiplied by 144 into 500,000 because this is the number of contracts and this is the contract amount, multiplied by 3 over 12 because we are hedging a period of 3 months. Is it clear to everyone? Please, I need participation. All right. And this is the income that we will generate. Divide by 100 because all values were in percentages. This is the income we generate from the open market. We invest 54 million at a rate of 3.5% for a period of 4 months, earning us 630,000. Okay. This is the income that we generate in the future market. This is the interest income generated on the futures market. 54 million into 3.8 minus 0.3 because the question stated that you can deposit money at central bank base rate less 30 basis points multiplied by 4 over 12. This is our period of investment. So this is the gain that we will be making over a 4 years period. This is the total gain that we are going to make over a 4 years period. And our gain is going to be 691,200. The gain is going to be 691,200. The gain is going to be 691,200. Do you all agree? Is it clear? The total gain is going to be 691,200. 691,200. If we calculate EAR is calculated on annual basis. So this gain is for a 4 months period. We divided by 4 multiplied by 12 to get a annual gain divided by the value of investment gives us the effective annual rate. Okay, Marwa, 691,200 is gain for 4 months. 691,200 is gain for 4 months. Agreed? Marwa, 6914. Okay. So if I divide 691,200 by 4, if I divide 691,200 by 4, what will I get? Monthly gain. 691,200 divided by 4 will give us gain for 1 month. Correct? Got it? 691,200 divided by 4 will give us gain of 1 month. Now, in order to calculate annualized gain or the gain that will arise over a 12 years period, we can multiply it with 12. So what I have done, 691,200 divided by 4 gives us the gain for 1 month. Multiplying it with 12 gives us the gain for 12 months. And then dividing the total value by 54 million gives us the annual percentage. Is this clear to you, Marwa? And is it clear to each and every student over here? We are done with the... I am now so tired. Futures. Yes, ER is less than 4%. It is not acceptable for the directors. That we will do in the theory question. Okay, that is something that will be included in the theory area. Is the futures clear to everyone? Any problems in the futures area? Okay. Let's move to options. Let's move to options. One working that will be common in both. One working that will be common in both will be this table. One working that will be common in both will be this area. Why? Because we also need to predict the futures price on the date of transaction in option contracts. So we don't need to do this working twice. In the exams, you can just Control C, Control V, copy paste, or refer to the relevant cell. Now, why are we, it says buy September call options. Why September? Why call? Why September? Why call? Can someone tell me why September and why call options? What is the logic behind September call options? Why not put options? Why not June options? Why not December? Why we will buy September call options? Reason, logical reason. Call is an option to buy, but why are we going for a call option? Why are we not going for a put option? Okay, call because future prices will increase. So we can buy at lower price at exercise price, sell in futures market. Excellent, Ahmad. September call, we take the money immediately following transaction date. Call because we are buying contract currency. Oh my God. Why do you guys do like this to me? Helen, are you listening to me, Helen? This is a blunder. This is not a mistake. Highly disappoints me. Future foreign currency hedging and interest rate hedging are two different things. Foreign currency hedging and interest rate hedging are two different things. In foreign currency, in foreign currency, in foreign currency, in foreign currency hedging, we look into call and put. When do we go for call options in a foreign currency? Please, everyone, tell me, when do we go for a call option in foreign? Helen, I will kill myself. I am asking, when will we go for a call option in foreign currency hedging? We will go for a call option in foreign currency hedging if we need contract currency. We will go for a call option in foreign currency if we need contract currency, need contract currency, need contract currency. We will go for a put option. We will go for a put option if we want to dispose of the contract currency, not the currency being hedged. Contract currency, contract currency, contract currency can be the currency that you are hedging. Contract currency cannot be the currency that you are hedging. In case of foreign currency hedging, you go for a call option, option to buy, call option, option to buy, call option, option to buy. If you want contract currency, if you want contract currency, if you want contract currency. In case of foreign currency hedging, you go for a put option, put option, put option, put option, option to sell, option to sell, option to sell if you want to dispose of the contract currency. Okay. But in case of interest rate hedging, things are entirely different. We are right now doing interest rate hedging. So in interest rate hedging, We will go for call options if the case is for deposits. We will go for a call option if the case is for deposits. We will go for a call option if the case is for deposits. In case of deposit, we will go for a call option. And in case of borrowing, we will go for a put option, put option, put option, put option, put option, put option, put option. Now, listen carefully. Why are we going for a call option? We are worried that interest rates will decrease. We are worried that interest rates will decrease. We know that if interest rates will decrease, what will happen? If interest rates decrease, future prices increase. If interest rates decrease, future prices increase. If interest rates decrease, future prices increase. So we will go for a call option to buy at exercise price, and sell it in the local market at a higher rate, or in the open market at a higher rate. We will go for call option to buy at a lower price, exercising our call option. We will buy at a lower price and sell it in the open market at a higher price, making a gain. Does it make sense to everyone? Okay. So finally, we will buy call options. In case of deposit, we are worried that interest rates will decrease. If interest rates decrease, future prices in the market will increase. So we will buy using call options at a lower rate and sell in the market at a higher rate. We will buy using call options at a lower rate and sell in the open market at a higher rate, making a gain. Is it okay? Thank you, Joy. Is it okay? Everyone. Is it okay? Number of contracts are same, since contract size is same, everything, all the terms were same. Now, in this question, we are given one exercise price only, that is 96. In this question, we are given one exercise price only, that is 96. What if you were given more than one exercise prizes? Will you do 2, 3, 4 workings? Will you do multiple workings? If, for example, in a question you are given more than one exercise, wow, Terero. Terero says, no, I will not do multiple workings. I want to meet ACCA examiner once more. You will do multiple workings. Terero, you will do multiple workings. If there are two exercise prizes, you will do 2 workings. Okay? If there are 2 exercises prizes, you need to do working 2 times. If there are 3 exercises prizes, you will do working 3 times. This is tested many times in the past paper. Okay, so exercise price is 96. And then futures price is 96.38. So what does exercise price mean? We are buying a call option. Call option means option to buy. Option to buy means that if I want, I will buy futures at 96. The market value of these futures is 96.38. So it makes sense to exercise your option. Something that is available in the market for 96.38 and you can buy it at 96. Why will you let the option lapse? You will exercise it. You will buy it. Correct? Okay. So now the gain is clear. You will buy at 96, exercising your option, and sell it at 96.38 in the open market. Clear? Okay. This is how it is supposed to be. Buy at 96 and sell it at 96.38 to make a gain. So gain is 0.38. Now the total gain, this 0.38 gain is in percentage terms. Either put a percentage symbol or divide it by 100. So the gain percentage multiplied by number of contracts multiplied by number of size multiplied by 3/12. Is this clear to everyone? Is this clear to each and every student? Okay. So this is the total gain that you get. This is the total gain that you get. Now, premium. Premium is something that has to be paid. Premium is something that has to be paid, and you have to carefully look how premium value was given. So in the question, it was stated options on 3-month dollar future, $500,000 contract size, 96 exercise price. Option premiums are in annual percentages. Option premiums are in annual percentages. Over here, option premiums are given in percentages. Generally, in interest rate questions, option premiums are given in percentages. And in case of currency options, how are they given? In case of currency options, how are the premiums given generally? Generally, if you have worked out some past papers, cents, correct. Thank you, Hardik, for saving me. That's a bit of relief. I hope there is none who will say that we get it in terms of percent. I was about to say this. I was about to say that thankfully no one has said that in foreign currency hedging, premiums are given in percentages, and we finally have a student. Thank you so much. Oh my God. In foreign currency hedging, generally your premiums are given in cents per quoted value. Wow. I wish you become examiner one day. You will be giving a question named options on foreign currency interest rate deposit hedging. Oh, anyways, so this is your premium amount. Premium is a payment. Premium is always an outflow. Premium is something that you will pay. Premium is a cost for you. This is a gain. This is a premium. And this is the investment return that we also calculated above. So this is your net gain. Now, one of the students a couple of days back asked me that will we add option premium in interest rate hedging questions, or do we subtract interest rate option premium in interest rate hedging questions? He even said, sir, you have made some mistakes. Sometimes you are adding premium and sometimes you are subtracting it. You are teaching us something that is contradicting. How can you respond to him? One of the students sent me a query, said that your teaching is contradicting itself. Sometimes you add option premium, sometimes you subtract option premium. I am unable to understand. Listen, this is a deposit case. This is a case where we are depositing funds. This is the case where we are depositing funds. In case of deposit, 630 is our income. 68.4 million is gain on futures. It is our income. And 34740 is our expense. So I need to subtract to calculate net income. But what if it was a case of borrowing? In case of borrowing, we don't have investment return. We have borrowing cost. So a premium gets added in borrowing cost because it increases overall cost. Okay. So sometimes it is big pain, very difficult to answer a student who comes up randomly and tells us that you are making mistakes. It is not a mistake. You have to logically understand. And the logical understanding is that option premium is always a cost. Option premium is always a cost. If you have investment returns, if you have gains on hedging, option premium will be subtracted. Otherwise, if it is a question of borrowing, it will be added. Okay, I have a very important call. Someone is calling me again and again. It is very important, so I need to attend it for a minute. But what we will do is that meanwhile, I will open the theory area of this specific question and you all can look into it. I will not take more than 30 seconds probably to answer him quickly that I am in class. So now let's move to the theory area. Let's now move to the theory area. And if we talk about the question, okay, let's just read the question and jot down the points. Give me just 1 minute. Give me just one. All right. So let's come back to the question. The first part was calculate the expected result of using the hedging methods being considered, assuming the central bank is 3.8%. Part B is discuss whether traded or future or options should be recommended to hedge the interest rate risk or whether sovereign company should consider any other choices. And like in this question, how do we determine either? Give the answer in percentage or amounts. Okay, Esther, it was given in the question that the directors gave you a target rate of return, correct? So this target rate of return gave me a hint that I must calculate the percentage annual return as well, isn't it? As per the question's information, it was given to us. Okay. Discuss whether traded future or option should recommend to hedge the interest rate risk or whether sovereign should consider any other choices. What are any other choices? What do they mean by any other choices? Are there any other choices? Yes, FRA, swaps. There are a lot of other choices that we can select. Obviously, there are a million other choices that we can select. There are a lot of other choices that we can select. So this was for 5 marks only. Compare and explain the relative advantages of Sabbath of using the over-the-counter versus the traded options for hedging this transaction. Don't you think that this is a very general theory? Don't you think that this is a very, very general theory that we have already completed in the 67 pages booklet? Don't you think that this is a copy-paste type of thing? Don't you think that this is covered in the 67 pages booklet as it is? Is it? Do you all agree? Those who have the 67 pages booklet, they will agree that there is a page which differentiates between over-the-counter options and the traded options. Okay, so effectively we have to discuss these two parts. Then the 5 marks, very important, are for professional marks. So first, let's go to the marking area. Instead of discussing the answer, we have done this, we have to do this. Okay, going to the marking area, question number 2, part A, buy September futures. You know, if someone only states that we will buy September future options, they are going to get 1 mark. Now, sometimes students fail because they don't attempt a particular question at all. So do you think it is a wise decision to leave a question at all? If someone just writes one line, buy September futures, they are going to get 1 mark. There is a big, huge lot of students that fail on 49. And then they come up and they say that they did not have a time. So they did question 1 and 3 and 2 was hedging. So they totally ignored it. But if you realize you could have passed by just writing by September futures. Okay. Number of contracts. Oh my God. Isn't this calculation so easy? Number of contracts we calculate 144. Loan divided by contract size multiplied by loan period divided by contract period. What's the big deal in this? These are free marks. If you practice 3 or 4 questions, these are free marks. ACCA is your friend. ACCA wants you to pass. They are saying just give us the calculation of number of contracts. I will pass you. Okay. Unexpired basis. We did the working of unexpired basis. I explained the logic. You have to show it in your exam. That table is important. Basis impact of interest rate decrease with future. Okay. Now in words, have you noticed that in ACC answer, sometimes they write what they are doing. They do write that we are buying futures because this is an investment case. Okay. Yes, basis table is main working. It will give you 1 or 2 marks. Buy September call options. If you just state that you are going for call options, you get 1 more marks. Premium calculation. What's the big deal? Pick the percentage from the table, multiply it with number of contracts, contract size, and the time period. That's it. Exercise option. If you just write yes or no, yes, we will exercise the option. No, we will not exercise the option. You get 1 more marks. Okay. Impact of interest rate decrease with options. And then finally, 10 marks. I think that this paper is very easy. Very easy. Things keep on repeating. Those who have genuinely, tell me please, someone who is studying AFM with me for past 2 months, don't you think that this question was a repeat telecast? Don't you think that if someone puts in reasonable effort in the previous past papers, he can easily pass any paper? Things keep on repeating. This is not the first time they are asking interest rate hedging. This is not the first time they are asking investment case. This is not the first time they are asking you these calculations. You have already done same calculations several times. Okay. All right, for theory that we are not now looking 1 mark per point, they give you 1 mark per point. And what they are doing, points can include neither reach 4% target, futures have basis risk, options could give 4%. If rates increase, rates rise and options not exercised, option premium, other choices. Maximum 5 marks. What do they mean? They give you a target rate. Do you remember in the question they stated that we have a target rate that you have to achieve? So they are actually saying that if someone talks about that target rate, that in case of futures, this target rate was not met. In case of options, it was met. If someone writes that in futures, although target rate was not met, but there is also a basis risk, the basis may not move as we have predicted. There might be some more possible outcome. If someone writes that in case of options, you have to pay the premium compulsory premium cost is to be paid, we are going to give them marks. And the last, oh my God, this is the easiest one. What? Benefits of OTC options, over the counter options. They are not standardized. You can go to the dealer and make any possible contract. The contracts can be according to your time period. They can be negotiated. Premiums can be reduced by negotiation. For traded options, what are the benefits? They are regulated. There is less chance of anyone being defaulted. Okay. And this theory is included. Now for professional marks, what you were supposed to do? Okay, analysis and evaluation, appropriate use of the data to determine suitable calculations, appropriate use of the data to support discussion, draw appropriate conclusions and design appropriate response, identification of omissions from the analysis or further analysis, which could be carried out to enable an appropriate decision or recommendations to be made. Effective challenge of information, evidence and assumptions supplied. We have assumed that basis will diminish linearly. In practical life, this may not happen. We have assumed that basis will diminish linearly. In practical life, this may not happen. And techniques carried out to support key facts and decisions. Recommendations are practical and plausible. Effective use of examples and calculations from the scenarios, information, and other practical considerations related to the context to illustrate points being made. Maximum 5 minutes. Coming back to the answer area, I have also made a summary document like I do for my students. So I put the points over here. Now, again, this is a very, okay, in short, whether it is or not, we have to, yes, we have to make sure we write some assumptions or discuss something which makes a question mark on the validity of data. Okay. Will you write your answers like I write in the summary document that I provide to you? Will you be writing answers like this? No. So why do I write like this? So that you can easily memorize, learn, revise while going to exam hall. Okay, you can expand the points. I write them into simpler 1 to 4 sentences, 4 words, so that it is easy for memorize, easy to retain, easy to recap, revise. There are around, if I accumulate, there are around 25 summary documents. The total number of pages is around 50, 60 or 70, and there is a 67 pages booklet. These are the 130 pages. These are the 130 pages that you will take with you to the exam hall. Print all the summary documents together. Print the 67 pages booklet and keep reading them. Whenever you are traveling, read them. Whenever you are going for the exam, read them. While traveling to the exam hall, not in the exam hall. Okay. So you have to keep reading them. For example, if you are going somewhere, just put one summary document in your pocket, and when you are traveling with your family, if someone else is driving, just keep reading that. If you are at some place and the place is boring, take out the summary booklet and read it. If you are at someone's place and you don't like them, take out the book and start reading it. If you are at office, you don't have any work, take out those 130 pages and read it. Please do print them out. Do print them out. Okay. If you want to ignore someone, take them out and read it. Yes, that's what I want. Okay. This was a good one. Okay, so this is the summary document that I have made, and there is literally nothing complex in this specific questions theory. So finally, we did 2 questions. Let's move to the third one. Now, overall, what do you think if someone who has studied, who has given a reasonable time to AFM, do you think question 1 and 2 were difficult for him? I'm not saying for someone who just starts and tries to complete everything in 15 days, but someone who has given 2 months, 45 days, or a reasonable 2 to 3 hours daily for 2 months, question 1 and 2 are achievable. I personally believe that in question 1, a reasonable average student can easily get 30 marks. I personally believe that a reasonable below average student or an average student can easily get 30 marks. 30 marks were very easy. Even 35, you can get even 35 in question number 1. As far as question number 2 is concerned, it was more easy. I believe in question number 2, anyone with a reasonable knowledge of interest rate hedging, they can get 15 marks easily. So if someone attempts question 1 and 2, they can even pass, or they can still score 45 to 50 marks, giving time to first 2 questions only. So third question, slightly difficult maybe, but I believe it was not difficult. Yes, if you get 5 or 10 or 15 marks in the third question, you are still pass. You just need 50. You just need 50 marks to pass. Yes, but what ACCA has issued, what paper ACCA has issued, I think it is very easy. I don't think it is difficult. Okay. Yes, but there are many more questions that ACCA have not issued. In reality, there are more than these 3 questions. ACCA randomly picks 3 questions and gives us 2 or 3 questions only. All right, finally, let's move to the third question. Are you all ready? Ah. No, but even at a student level, I don't think there was no bonds. There is nothing difficult. There is nothing very remote or very new. They are not asking you Dutch auction. They are not asking you dark pool trading system. They are not asking you SPACs. They are not asking you green finance. They are not asking you project value at risk like Tesla company. They are not asking you MIRR, or they are not asking you BSOP model. First 2 questions were literally straightforward. Yes, what I believe that September 25 is actually going to be a bit more difficult. Have you all noticed the passing ratio? Previous passing ratio was good. It was not bad. It was a good passing ratio. I don't know why students kept on complaining that the paper was very difficult, but too many students passed. Even once again, there was a hat trick of AFM positions. 3 of my positions got ranks. Just like always, they were prize winners for this session as well. So June was not a difficult attempt, to be honest. I don't know. People said while attempting the exam paper that it was difficult, but then when the result came out, many passed, many did pass. Anyways, if someone did not pass, they may have faced a difficult question, and we must be ready for the difficult part as well. But September 25 is going to be slightly more difficult. That's my opinion, that September 25 will be slightly one level higher. Okay. Anyways, let's move to the question number 3. Now, this question number 3 was something which you have studied million times. You studied it in basic papers, ratio analysis. You did it in FR. You did it in SBR. You do it in multiple papers. It was a question in which you were given a proper scenario along with relevant profit or loss account and statement of financial position, and finally you were given some non-financial measures, and then you were supposed to perform the analysis of the company. You all have done this type of question somewhere. Do you all agree? You have performed ratio analysis, financial and non-financial factor analysis in the past, correct? Okay, Salman, yes, the paper is available on ACCA website and I have downloaded and compiled it as well. I can share it with you after the session. Okay, sir, you told us that it will not be difficult, but yes, it will not be, but being technical means that the June attempt, maybe it was difficult, but the values were straightforward. There was no complex thing. Same repeated technique was asked. Anyways, so this question is about ratios. You have to perform the non-financial and financial analysis. If you read the requirement, it says evaluate GCR's financial performance and financial position. Your answer should include both the company and investor perspective. You should indicate in your discussions any omissions in the data provided where further information will be helpful to extend your analysis. Provide relevant calculation for ratios and trends to support your evaluation. Note, 10 marks are available for the calculations out of the 20 marks, and then we have the professional marks as always. Now, again, 10 marks are for what? 10 marks are for what? Just calculation of ratios. If at professional level, if at this professional level you don't know gross profit margin, gross profit markup, net profit margin, return on capital employed, return on equity, you don't know current ratio, you don't know quick ratio, you don't know these basic ratios, EPS, earnings per share, you don't know dividend per share, if you don't know return on capital employed, if you don't know debt to equity ratio, don't you deserve to fail? To be very honest, you are giving the last paper of ACCA probably. If someone tells me that I don't know what is gross profit, What is net profit margin? What is current ratio? Don't you feel that that person does not deserve to be a member or affiliate? This is something which you do at all levels. At a very basic level, you do it in your reporting paper, in your management accounting paper. Then you do ratio analysis of non-financial factors in performance management. Then you do it in financial reporting. Then you do it in SPR. Sometimes in other papers as well, you calculate the basic ratios. So what was difficult? Oh my God, someone can try their luck and even pass this paper. Like if someone who has not prepared because of work commitments and goes into AFM paper and finds this question, and if he remains calm in his senses, he can easily get 25 out of 25. Don't you feel that this question was given for those who are struggling to find time to study? Don't you think that someone can pass it on a luck basis in AFM as well if they get this simple question? Okay, how many ratios are like all to be? Okay, let me go to the marking. Let's look into the marking. Okay, if you go to the marking, question number three, the first area is about calculations. Now look how they have given the marks. Profitability or operational ratios, calculations not in can include revenue and operating profit margins, operating profit margin, asset turnover, ROC, passenger number calculations 3 to 4 marks. So if you calculate return on capital employed, return on equity, net profit margin, gross profit margin, markup, if you calculate increase in revenue, increase in profits, you get 3 to 4 marks. Liquidity ratio. What comes under liquidity ratio? Do you all need a 2 to 3 page summary of ratios? If yes, you can inbox me. I have a 3 to 4 pages document of ratios, which I teach to my CA students. I can provide that document. It is a 3 or 4 pages document, which is all the ratios and their basic interpretations below it. So I will provide that as well. Okay. Now tell me what comes under the liquidity ratios. Liquidity ratios, solvency ratios. Yeah, current ratio, quick ratio, excellent. Then you have to calculate the investor ratios. Calculation can include earnings and dividend per share. Oh my God, earnings per share, profit after tax divided by number of shares, dividend per share, total dividend divided by number of shares, dividend cover, how many times the profit can cover the value of dividend, change in share price, change in share price. Like if you are given year number 1 and year number 2, you calculate the increase percentage or decrease percentage. I mean, what do you want? ACCA gave this question to pass you. Okay. Then dividend yield, total shareholders return, price to earnings ratio. We just did price to earnings ratio in EPS in question number 1. And now they are again asking the same ratio. And look at the marks. Don't you think if you use your brain, if you deserve to be a member or affiliate, you have done these ratios many times before. Maybe you also apply it in your practical life. If you are in audit, if you are working in audit, don't you apply ratios, increase, decrease percentages? We do analytical analysis. Don't we do it? No, actually, I am saying that you have to be very careful. Sometimes I believe, I personally feel, I don't know. Do you all agree that this was an easy part? I personally feel that this calculation part is easy. I cannot talk about interpretation. I'm not saying discussion. I'm saying calculations. Because I remember that when I did ACCA, I was like, I used to see ratio in every other paper. I saw ratio in the basic papers. Then I saw ratios in PM, then even FM, then even in FR, then in SBR. At the time, SBR used to be P2, corporate reporting. So there were ratios everywhere, isn't it? So it is such a common topic. And then you were supposed to discuss if the ratios is increasing, positions are getting better. If it is decreasing, positions are getting worse. And then what are the professional marks? Now, do remember that these 10 marks are without professional marks. Even if I check the professional marks, it is adding it further. Why? Look at what the professional marks are given for. Appropriate use of the data to determine suitable calculations. Now, what are you saying? You are saying that have the student use the data of the question to calculate the ratio? Yes. So I will give him marks. Appropriate use of the data to support discussions, draw appropriate conclusions, and design appropriateness. For example, if I calculated a current ratio and it is not bad, it is better than previous year, and I have written something relevant to it in discussion, you have connected the dots, you will get marks. Okay. Likewise, these are the points for your professional marks. Now, coming to the question, this was the data given to you. Okay. If we look into the data, Grand Country Railways is probably the company's name. You are given yearly data for 2002, 3, and 4. Can you calculate the percentage increase in revenue each year? Yes or no? Just tell me in yes or no. Can you calculate the percentage increase? Yes. Can you calculate operating profit margin? Operating profit divided by sales revenue? Yes. Can you calculate the tax rate, tax expense divided by profit before tax? Yes or no? If it is different, you can also comment that due to difference in tax rate, the total profits are different. You are given dividend over here, and you can find the number of shares from here. You can find number of shares from here. They are 200, correct? So can you calculate earnings per share? What is earnings per share? Profit after tax divided by number of shares. Yes or no? Yes. Can you calculate dividend per share? Total dividend divided by number of shares. Yes or no? Yes. Can you calculate retention ratio and payout ratio? Like how much of total profit after tax is paid in terms of dividend and how much is retained in the business? Yes or no? Yes. Higher retention suggests that the company has investment opportunities and it will be paying higher dividends in the future. So what's difficulty in this? Okay, in the balance sheet you are given with current assets. You are also given with current liabilities. Can you calculate current ratio? Current assets divided by current liabilities? Yes. So we have just discussed 5 ratios. We have just discussed 5 or 6 ratios. I will give you a 3 to 4 pages handout in which there are key ratios and their interpretation is written just below those relevant ratios. Now, sir, is this question common? How many of you have seen such a ratio analysis question previously? It came in AFM in 2009 September 2019, then September 2022, and this time. And you can ask those who were in my batch, is there someone who was part of June batch as well? Around 10 days before the exam, I told my students, do ratio very properly. I can expect that it will be tested. If there is someone from the regular June batch who used to read all the chats, all the messages, all the broadcast, they can confirm. You can ask the students who got 84 and 82. Even Benson said that sir rightly predicted the, okay, Sabha is here. So I told my students around 10 days back, I gave them one handout. And to be very honest, it was not on portal. It was nowhere. I never discussed it in any live class. And just 10 days before the exam, I told my students, please do this document. And I can see a ratios question in your paper, and it was there. Okay. So those who did follow all the broadcasts on time, all the group messages, and did what I said, were able to clear very easily because they did learn that ratios document. And then when they came to the exam, even I said, do the September 22 or 20, September 19 ratios question, it will help you. So those who did were very and got this answer were very lucky. They easily cleared the exam. Even I talked to one of the students. She had no time due to busy audit season and everything. She went to the exam after, I guess, 15 or 20 days preparation or something like that. But she said that she did this question by chance. She read my message and by chance, I don't know, she just read the ratios and out and practiced it. And she passed on 50, I guess. If I am not wrong, she passed on 50 or 51. And she then texted me, messaged me on the result date that I am feeling absolutely lucky because I did just this and I passed. Because if someone is perfect in this, they don't need AFM knowledge. They passed, they scored 25 here, and you can score 25 in the rest 75 marks paper. Okay. All right. Coming back, we will discuss further. Coming back to the answer, now these are the points that you have to keep in mind. Okay, now how will you draft the theory? You will put heading about each type, like profitability, discuss the profitability ratios. Likewise, liquidity, discuss the liquidity portion. Then solvency, then investor ratios, and then conclusion. Conclusion is very important. How do we know what headings do we need to use? How do we know what headings do we need to use? If we look into the question, it says evaluate financial performance and position. Your answer should include both the company and investor perspective. You should indicate in your discussion any omissions in the data provided. The further information will be helpful to extend your analysis. So there was no specified heading. You can use any headings, but it is always a good technique to draw a conclusion. Okay, you can read these areas a couple of times and the theory for ratios that I'm going to provide you. Further, you can see what they have done. Change in revenue, operating profit margin percentage, change in operating profit from previous year, asset turnover, return on capital employed, liquidity, current ratio, trade and other payables. Do you all remember stock days, debtor days, payable days? Do you all remember stock days, debtor days, payable days? So they have calculated those days. I will give you the sheet in which you have all the formula. Now, sir, do we need to calculate so many ratios? No. ACCA answer is always very much detailed. If you have 10 marks for ratios, you can calculate 10 to 15 different ratios. Ideally, calculate 15 different ratios. Do make sure that there is a variety. Like there are some ratios relevant to profitability. There are some ratios relevant to liquidity. There are some ratios relevant to investors' data. There are some percentage increase from previous year. Don't do like this that you keep on calculating percentage increase for everything because that's easy. No, ACCA staff, ACCA examiner is not stupid. He will see that the student is trying to fool me. He's calculating ratios and he is just calculating the percentage increase from previous year. So make a variety, okay? You have earnings per share, dividend per share. These are the easy to investor ratios. Market price per share, total market value divided by number of shares. Change in share price, dividend yield is your dividend per share divided by market price per share. And then there were some non-financial information given to you as well, which you can calculate. I don't think that this is a difficult question. Yes, you may not be able to calculate all the ratios. You are not expected to calculate all the ratios. You can calculate 15 good amount of ratios and then comment on them. So this is sort of, I have discussed the question, but I will appreciate if you all can read it a couple of times after the class ends and also make sure that you obtain that particular document that I am talking about. All right. So finally, where we are right now, we have finally discussed entire June 2025 past paper in this one single session. I am waiting for your WhatsApp feedback. Your feedback on the WhatsApp groups will help others know whether today's class was helpful or not. We did everything non-stop. We tried and discussed each and every aspect of June 2025 past paper. I am going to provide you some material do note down my WhatsApp number if you are someone who is watching the recording from the YouTube, or if you are someone who is a new student. I will take 10 minutes break and then I will start replying all of you. In fact, I have another session, another CA session is 5 p.m. So after 5 to 6, that session is for 1 to 2 hours. After that, I am going to help you out all. We did entire June 2025 past paper, redo the same questions, redo the same things, and then tomorrow, suggest me an agenda for tomorrow that we can do. Please do share your feedback, your valuable, positive, negative, whatever feedback you have about the session in the WhatsApp group, because there is a huge number of ACCA students who don't attend live webinars because they don't have some feedback like how it is going to be. They think that their time is going to be wasted or something. But you can see that today we took a very less break. Okay, for tomorrow, let me see what we can discuss. A lot of students have requested for me to discuss two areas. Number one, the bonds area. Number two, the hedging area. So I will see what are the majority votes, where are the majority votes going towards. And finally, I conclude this session. I hope that you all did have a wonderful time today. I hope that there was some contribution. There was some contribution from my side, maybe 1%, 2%, 3%, 10%, 20%, I don't know. But I hope that this session did prove to be beneficial. Thank you so much. Thank you so much. It is always wonderful to teach everyone. Stay blessed, be happy. I and my Wi-Fi team wish you best of luck for the remaining days. Do make sure that you are always connected. And remember, qualification is everything. If you are one paper away or two papers away, trust me, once you get qualification, you are recognized. Okay, many of you are just struggling in your professional life because you are not professionally qualified today. So make sure that you do complete this qualification. This qualification is above everything. If someone, it is my personal opinion, if someone is struggling to find out time to study because they have a hectic job, my personal opinion is that try to get as many annual leaves, even unpaid. Borrow money from someone for some days if you are struggling to meet your daily expenses. Qualification means that you will get promotions. Without qualification, you are nothing. No one gives you value at professional level. So please make sure that you invest maximum time. You still, it is 9th of August, it is still you have 21 to 28 days. Cut on family events, cut on parties, cut on going out, cut on anything. Maybe you cut out on watching movies, TVs, playing games, whatever you do in your life, I don't know. But you have to make sure that you qualify. And I have my best wishes towards you. Wishing you all the best. Stay blessed and keep doing the good work. Thank you. Bye. I will wait for your feedback on WhatsApp groups so that others get to know what we did today. Thank you.